Hello, everyone, and welcome. Good morning to the West Coast, good morning or good afternoon to the East Coast, and good evening to our friends in Europe, and welcome to the FinTech Founders AI Virtual Summit. I'm Alec Wright, the Chief Product Officer at OneValley and one of the Managing Directors of OneValley Ventures. We're looking forward to spending the next few hours with you, digging into the ways in which artificial intelligence is transforming one of the world's largest and oldest industries, finance and financial services. We have an exciting lineup of fireside chats, panels, and startup presentations for you today. Our speakers will be sharing their perspectives on how artificial intelligence is paving the way for a more efficient, ethical, and innovative industry. And we'll be looking at trends, technology advancements. We'll be hearing from thought leaders and meeting some of the most exciting companies that we think are going to be emerging over the next 5 years. And most importantly, we'll be collecting priceless advice from some of our speakers on how startups can take advantage of AI and accelerate their business. Big data and artificial intelligence have been major focus areas for OneValley for a long time. Over the past 10 years, we've had the pleasure of hosting countless AI pitch nights and supporting hundreds of early stage AI companies. But our goal of today's event is to convene early stage companies working to innovate in financial services and share guidance, perspective, and best practices for the next generation of AI founders. Now, today's event would not be possible without our strategic partner and co-host for this event, Seekr Technologies. Seekr is a privately held artificial intelligence company that fuels innovation and unlocks productivity for businesses of all industries through responsible and explainable AI solutions. They offer a complete end-to-end AI and data platform with comprehensive content scoring capabilities and a tool set to build principle-aligned large language models. On behalf of the whole OneValley team, I'd like to thank them for making this event a reality and for the incredible support they've offered for our own internal AI initiatives and our ecosystem of early stage AI companies. Before we kick off, though, I'd like to give a little bit of context on what we do here at OneValley for those who aren't as familiar. OneValley is a global entrepreneurship and innovation platform that supports founders, accelerates startups, and empowers organizations across the globe that foster innovation communities. We provide tools and resources directly to founders and also provide software tools and resources to many of the world's top accelerators, incubators, global enterprises, governments to support their own startup ecosystem. So our mission at OneValley is pretty simple. We want to democratize the resources of Silicon Valley and share them with the global startup community. And we do this through a variety of initiatives like today's event, through OneValley Ventures, our pre-seed and seed investment fund, as well as through programs and initiatives like the one we're really excited to launch here today, which is, we are announcing the launch of a new industry program for early stage startups leveraging AI to develop new FinTech products. This program will provide pre-seed and seed stage FinTech startups with access to AI technical advisory support, free and discounted AI platforms and computing infrastructure to accelerate their product development, as well as a curated network of financial services stakeholders interested in connecting with emerging FinTech startups. This program has no cost. There's no strings attached or anything like that. It's designed to just provide a high impact ecosystem for early stage founders without asking them to spend dozens of hours going through programming. So if you're an early stage FinTech startup looking to leverage AI expertise and infrastructure and connect with enterprise stakeholders, VCs, and folks that are relevant at the pre-seed and seed stage, you can apply using this QR code or reach out to Tara at theonevalley.com for more information. Also, keep an eye on your inbox. We'll be sharing some more information about the program, and it's really will be a great resource for early stage founders building in this space. Now, let's take a look at what we have coming up for you today. First, we'll be kicking off with a conversation with Sarah Biller, the Executive Director of Vantage Ventures and co-founder of the FinTech Sandbox. This discussion is going to be focused on her learnings from a decade of supporting early stage FinTech startups, and especially with their access to data and building data intensive products. Then we'll be hearing from Andrew Wyndham, the Director of Product at OneValley and the Haystack AI product lead, on our journey of building and launching an AI tool for early stage founders to help them find the right financial tools and services, as well as hearing from the founder of and CEO of DigsFacts on new emerging technologies they're developing in the fraud and financial crime space. We'll then be welcoming Pat Kondo, CEO of Seekr Technologies, and Rich Haruska, COO of the Tim Knetz family office, to dig into Pat's experience as an AI founder from all angles, technical, fundraising, and customer acquisition. We'll be then moving to a panel on building AI models for the industry, where we'll have Nick Sabrawal, Ale Vigilante, who's the managing director of Novarian Capital and the former director of the FinTech research group at Fidelity, as well as Sam Di Paola, the president of Evergreen Advisors, sharing their perspectives on creating AI models that really create impact. We will then have a short case study where we'll hear from Seekr's principal product manager and the Haystack AI lead on their experience of launching a new LLM and new product in just a matter of weeks, from kind of idea to MVP. And then we'll have a great conversation with Sal Ramatula, the CEO of Worth AI, on his vision for enabling AI-powered business credit scores and his experience launching and growing his last company and how that's influencing his current journey. We'll then have a quick conversation with Martin Whitaker on ethical AI and what that means in the financial services industry. And then hear from two seed stage founders that are already making a huge impact in driving AI initiatives forward in financial services, and learn more about their vision for their companies and what they're seeing in the market. And with that, we're ready to get started. It's my pleasure to introduce Seth Haubin, the VP of Business Development at OneValley, who will be moderating this conversation with Sarah Biller, founder of FinTech Sandbox and the executive director of Vantage Ventures. Seth, over to you.
Thank you, Alec. It is a pleasure to be here today. As Alec mentioned, my name is Seth Haubin. I'm the Vice President of Global Business Development and Partnerships at OneValley. It is a true honor and pleasure to share the virtual stage with Sarah Biller. Sarah has been at the forefront of innovation in financial services for 20 plus years. As Alec mentioned, as the executive director and founder of Vantage Ventures, as the founder of FinTech Sandbox, one of the most influential data providers for early stage FinTech startups. Also as a board member of many AI startups, board member of a tech-enabled community bank, ex-founder herself, innovator, lead innovation at State Street. Just a tremendous amount of experience and complete rock star in the space. And so I couldn't think of a better person to share this topic of how to be a FinTech startup in the emerging world of AI with. And so, Sarah, that is the background. As long as you're okay with it, I would love to jump right into the conversation.
Yeah, Seth, thank you and the OneValley team for having me. You forgot to mention we're friends.
Also friends, so personal and professional honor. And privileged to be here. And so, again, both from the Boston ecosystem, I've spent a lot of time kind of building the community locally in Boston. And so tremendously excited for the conversation. And Sarah, I'd love to start with a general kind of state of the state question, and then, certainly get more specific and more startup oriented. But I had the opportunity this year, I was at the World Economic Forum, and obviously AI was one of the major topics. And I had the chance to listen to the CEOs and the heads of Barclays, JP Morgan, Blackstone, MIT leadership, Microsoft, and the who's who on the topic. And, the general consensus was all the same, which is AI has a chance to be, the most profound technical advancement of our lifetimes and generation. But when asked kind of what that meant in practicality, it was kind of a wait and see. And so I would love to just kind of set the stage with what's the current AI adoption in financial services, and kind of where do you see it headed in the next handful of years?
Yeah, let's start with the current state. And I'd say, Seth, in a very simple word, it's table stakes. When you ask about sort of the adoption metrics, we always look to outside validation of our own belief and experience. And I recently read a survey conducted by The Economist, quite level-headed approach to surveying, in this case, bank tech executives globally. And remarkably, 85% responded that they have a clear strategic remit and plan for the implementation and use of AI. And this was specific, and it's important, in new products and services. So even our incumbents this 2,000-year-old industry, actually it's 4,000, we'll talk about that probably shortly, it itself is driving towards the adoption of AI. And so I think what we can say is about the current state is AI is rapidly being incorporated, if not almost holistically within the industry, certainly in the innovation state. And that ability to execute on the use of AI, just like you heard from all those world leaders, is going to separate the winners from the losers in this next cycle of financial services innovation.
No, it's certainly kind of really important to hear. And, again, execution is a common theme, and no different than kind of prior to the AI days where, a good idea gets you so far, but kind of proper execution, especially in a regulated environment. And so with that as kind of the backdrop, I would love to shift gears a little bit and talk specifically about FinTech Sandbox. This is an organization you helped found, I think, over 10 years ago, impacted hundreds of startups by providing access to what was historically very costly data to better scale their businesses. And so I'd love to give you the opportunity to kind of share a little bit about the organization, the story, and really how it's working with the next generation of AI startups.
Yeah, Seth, thank you. I will say right off the bat, I'm the co-founder with David Jagan, and I heard that you have Ali on later from Fidelity, and David is the managing director of F Prime, Fidelity's venture arm for FinTech, and quite a visionary. And we actually did do exactly what you said. We envisioned a world where innovation was not stalled, where startups were not encumbered, as I was in my own company. I built a predictive analytics platform for institutional debt investors that had a baseline use of AI. But if you don't have the data to feed your models, or you don't have the data to help inform the customer decisioning in FinTech, you don't have a company. And so FinTech Sandbox was it's a labor of love. It's a not-for-profit. It's very strange in financial services to talk to someone about, and we don't make any money. They're like, what are you doing? But nonetheless, nobody told this bumblebee we couldn't fly. A decade ago, set out to work with the most significant data providers globally who at that time had the lock on market data sets. And we had a very positive response. Fast forward to today, a decade later, we've supported over 300 high growth, high impact FinTech startups, and increasingly startups that are outside of financial services, but embedding FinTech in other industries with free access to these data sets. It's unlimited for 6 months. And it gives you a chance to really explore and develop your thesis. And it's been an important catalyst, as you said, and humbly so, I say that, to this innovation cycle. And so it's been really a pleasure to be in a position to see a decade of the use of data and recognize, too, that the innovators in financial services today are at an inflection point, because the application of AI, as you know, requires more and more data sets, and oftentimes diverse data sets that, again, are difficult to procure.
No, and I'd like to just kind of double click into the data side, and as it becomes kind of more relevant and prevalent and important and transparency, and just kind of the role you see FinTech Sandbox playing in kind of this next chapter.
Yeah, well, I certainly, we see our next decade of success really enabling us to further embed within the FinTech innovation sector. We started in Boston, where you and I know one another, and thank you for being that foundation, that cornerstone to our community. Seth, when we were building it, there were like you, me, babe, and like 2 others. It was not a big community, but today it's about 5,000 entrepreneurs. There's lots of initiatives. We have with intentionality moved beyond sort of the financial centers that we well serve within the United States and North America. The next generation of innovation, of course, is happening. It's in Europe. It's happening on the continent of Africa. It's happening in LATAM. So our vision and our growth trajectory and support of this innovation cycle for us envisions being more active globally and not leaving behind our local supporting structure. It also is it's a need to develop relationships with non-traditional data providers, those who have not historically seen themselves really ripe for financial services, but we know today they are. A good example of that is we have a really incredible relationship with the Weather Channel, right? So you've got the next generation of portfolio analytics, insure tech, even if you think about it, lending into the commercial real estate market. You have a lot of reasons where weather has some variability. So that's but one example, but that's where I see us heading, global and into the larger, more diverse data sets to meet the emerging needs of the innovators.
No, really fascinating to hear, and especially the kind of diverse data and how it all kind of comes back into the financial space. And so, getting to kind of the meat and the potatoes of the conversation on, again, how to be a fintech startup in the emerging world of AI. And so, as someone who's engaged with hundreds of startups through investing, supporting, and operating, any key kind of lessons you've learned or advice you would give kind of people in the audience who are just getting started on, again, how to think about kind of AI-driven technologies?
Yeah, I think about the AI startups, AI-driven startups we're even working with in FinTech Sandbox, and then my larger portfolio of companies that I do board work with and I'm directly invested. And I think what we see now, if you're launching a fintech, or even if you're a fintech that has some maturing capability in AI, the criticality of paying attention to compliance and the rigor in which the regulators are looking at the application of AI, it cannot be understated. That's incredibly important. At FinTech Sandbox, we support a company called Bond.ai. They provide needs assessments to banks, meaning historically, and I'm a board director on a community bank, you would wait until your customer came to you to say that they needed some financial service, short-term working capital loan, some sort of expansion in the way that their overnight, their deposits were placed in an overnight securities environment. Bond AI looks forward and helps to do a needs prediction, a needs assessment. This is brand new for the industry, right? This is a capability that we had hoped for 2 decades ago when we first started seeing like Jim Simons at Renaissance Technologies apply AI to his quant fund. Now it's trickling down through the other large categories of fintech. So I think you've got to be mindful that the regulators themselves are still uncertain about the application of AI. Its uses, its testability. So compliance really matters. And I think the other side of this rapid digitization of financial services, particularly as a fintech, is you have to be mindful of your cybersecurity. You have to recognize that the aperture of risk every time you're now furthering the adoption of technology just exponentially increases. So compliance and cyber are 2 lessons that we continue to stress to our innovators, ones that often aren't top of mind when you have the next generation of products you're building.
No, and it's certainly fantastic points. I'm curious your thoughts, Sarah, on best practices and ways you've seen to mitigate those risks in terms of transparent models, ethical models, unbiased models, or what it's going to take to really get the regulated space comfortable with these models.
Yeah. Well, I think the first thing is to really contemplate where your data that you're using for your applications are being stored. And remember, at the end of the day, we laughed about it at the beginning, but it is true. We've got 4,000 years of moving money around, right? I mean, the Babylonians were banking farmers and merchants. We do the same thing today. We lend, but where the Babylonians were using clay tablets and, kind of carving in, if you will, the old general ledger, which is true. It was a cuneiform tablet. Today, you're doing that digitally. Your data lakes matter. Your data storage matters. Your ability for tracing the movement of money is so critically important to the regulators and to your own success as you're using technology. When I was in traditional industry places like State Street, you know, you had that joke about the kind of fat thumbs where you accidentally made errors. You cannot do that today in Digability. So I think that's the first thing I would say is just one, the advice would be make sure you're securing your data, you have traceability, and you have reportability. The second thing that on the other side of that is what we think about when we look at the application of AI, and that's the black box effect of AI. Today, you have a lot of challenges about explainability. You have uncertainty about the results. It is true to say that we are really, even though we're quite some time in the building of AI applications, we're still in the earliest stages of understanding how it works. And so in that case, I think the other thing to be mindful of if you're a fintech using AI is trying to, again, understand your data parameters, what your models are doing with the boundaries of that data. You have highly trained individuals within your firm who can spot patterns, good and bad, that might infer that there's some bias or other challenges coming out of your AI models that you can correct for. And I think those are the two lessons I would take. They're quite simple to talk about, but they're rather complex and difficult to implement. But it's important as we go into this rapid cycle of innovation. I mean that sincerely. It's moving much faster than it was a decade ago.
Yeah, no, I think critical points in the pace, but the pace plus kind of again thinking about compliance and regulation, and how that all plays in. And so, Sarah, I know FinTech Sandbox is a great resource. I'm curious if there are any other resources that jump out to you for early stage founders that might be worth surfacing for the audience.
Well, I'm super stoked. This is not a commercial. I did not know what Alex was going to say when we kicked off, but who knew that OneValley was beginning to introduce toolkits for the adoption and deployment of AI for innovators? That's important. Some people are going to cringe when I say this, but when I started my company, we were early adopters in AI. And I mean that in loose quotes. Everyone can see my air quotes, because we were one of the first to deploy random forest, which really was a very crude ML capability. But we were applying it to our predictions of credit risks widening and tightening. And it was really important at the time. I can do more things on my phone in two clicks than I could for an 18-month coding session that cost us a couple $1 million to embed that. So I think that you got to avail yourselves of the tools that are available to these data science tools that the rest of the industry has spent millions of dollars creating. They're now can be embedded in your everyday workflow when you partner with places like OneValley. AWS has a toolkit for data science in one of their instances. So you have those opportunities as fintech entrepreneurs. I think the other thing that's really fascinating to me is the rise of the venture firms, that are actually raising money from industry partners. So the bank techs, the FinTops of the world, who are bringing those banks to the table to run alongside the entrepreneur. That's another place to really find yourself in those ecosystems. So all in, it's a vastly different world of innovation for fintech entrepreneurs, and it's what makes it so exciting.
It is certainly exciting, and I can't believe we are almost out of time. So I would love to give you kind of the last word here, and just again, if there's any last message for the audience on this topic of just how to be a fintech startup in the emerging world of AI.
Yeah, Seth, I'm going to do something that I hope, again, just want to do it from where it comes from, which is every fintech entrepreneur out there has an opportunity to do immense good. And it's good business today to be building applications that contemplate the broader breadth of customers available to you, the broader opportunity to move capital into places that are solving intractable problems. And so fintech entrepreneurs have a chance today to really embed like frictionless payments into healthcare and widen the aperture of opportunity for people to get great healthcare. You can do point of sale lending at really, at the moment in which someone's coming up and they're a construction worker and they're buying supplies at whatever retailer that they're buying supplies. So don't forget that FinTech is an application upon itself. It is so significant to multiply the effects of what you can do and do good. And so I'm just so honored, Seth, to sit with you all today to think about where we're heading and to think about what the innovators on this call and your partners can do to really make us a better world. So thank you.
Sarah, the fastest 20 minutes I've had in a long time. I wish we had more time. We got a lot of great content ahead. It's certainly been an absolute honor and privilege to share the stage with you on behalf of the audience, OneValley, Seekr, the organizers. Just thank you for taking the time to share your insights and expertise. And with that, Alec, back to you.
Thank you so much, Seth. Thank you so much, Sarah. It's a great conversation and incredible guidebook for early stage companies that are looking to get going and take advantage of the resources that exist for FinTech founders, especially in this increasingly kind of challenging, or maybe not challenging, but rapidly evolving AI world, where it feels like there's new tools, new benchmarks every single day. So thank you again, Sarah, Seth. And it is my pleasure to move on to our next content session. And welcome Andrew Wyndham, the Director of Product at OneValley, and the Product Lead for Haystack AI, to share a little bit more about the work that they've done to transform how early stage founders and small and medium businesses discover financial products and tools. Andrew, the floor is yours.
Thanks so much, Alec. Really excited to show you guys what we've been working on today. So I'm going to show you guys today Haystack. This is OneValley's newest product, launched in beta about 3 months ago, but cooking for a good deal longer than that because it's working really based off of the work we've been doing with startups for a long time. So as Alec mentioned at the start of this, OneValley has been in the business of supporting startup founders for quite a while. And we do that in a lot of ways, but one of the most popular things we've ever done is negotiate lower prices on tools that startup founders tend to use anyways, like Brex or Stripe, and provide them to our network of like 100K plus startups. So this one, shocking, very popular. People like to save money on things that they need to buy anyways. And about 12 months ago, we decided we'd dig a little bit deeper into what was happening when these startups were purchasing something through our what we call our perks program here. And what we found was people loved saving the money, of course, but it wasn't really solving. The money was actually one of the smaller pieces of the equation here, because as anyone here who's done it, and I imagine quite a few people here have done it, if you're a startup and you're purchasing enterprise software, the process sucks. You're coming in here, you need to buy something, probably in an area you're not personally an expert in. I don't know a lot of people who went in to start a company because they really know payroll software, unless it's a payroll startup. And you've got to choose something that is going to have ramifications for your company years down the line. I mean, the annual fee is usually the least of it. It's the switching cost down the road. You chose the wrong one in year one. Now year three, you've got to, bring together a ton of stakeholders and spend 3 months switching everything over. It's a huge pain. So we designed Haystack to address all of these pain points of low knowledge, but relatively high stakes for founders who have to purchase FinTech HR products for their startup. So I'm going to show you right now what we've been working on. And I hope afterwards you'll head over to tryhaystack.ai, poke around and let us know what you think. So we started this by bringing in about 50 of the products that we've heard from our startups are very popular to use. And many of these we've had long-standing relationships with, providing discounts to our users through. Things like credit cards, payments processors, HR, payroll, expense management, financial modeling, accounting, things that most startups are going to need to purchase in their first years. And we've pulled together a good amount of research on them to both power product reviews and, of course, our AI, which is your shopping assistant throughout this process. So I'm gonna right now play the role of a startup founder who's come to Haystack and is looking to purchase, let's say, a an HR platform. First major hires have come on, need to figure out a way to pay them, need to figure out a way to manage them. This, item 11 on my to-do list of 50 things this week, but let's get it done. So we've pulled together, somewhere around 6 or 8 of these top platforms for startups, choosing specifically ones that are useful for companies at this stage and size. Let's take a look at this one here, JustWorks. As you'll see, you first see what you expect to see in a product review, right? You see what the reviewer thinks about the product. You see pros, cons, breakdown of pricing, a thoughtful narrative review of who this is right for and who it's not right for. And we're proud of this content, but let's be honest, even this was Pulitzer Prize-winning journalism, you probably wouldn't be ready to purchase your HR platform after reading a single article. That's where the AI lets you go a little bit deeper to try to address some of the questions you probably still have. So if you want to, you can ask, of course, any question about JustWorks. You can ask about HR platforms generally. You can even go, and this is something that we found was really difficult to do with existing tools. You can ask about specific plans, because ultimately that's what you're going to buy, right? The plan, not the product. So with this little button here, I can save this plan into my research base right here. As I go through and I do my shopping, and let's hop over to competing product here. Let's see. Let's go to Gusto here. I can continue to accumulate plans here that are interesting for me to look at. So I can put together sort of a custom list with custom comparables that aren't just heading, major products together. Because if you look for, Gusto versus JustWorks, you could probably find an article about that. But you're not going to find an article that's comparing the entry level prices of, simple Gusto plan versus JustWorks Basic. But you can do that really simply with just a single click here. And it's going to generate a response for you that's, of course, original, but is referenced against the content we've produced for these pages. We worked really hard to make sure that this is quite a narrow but deep AI that is always going to be fact-checking itself against the research we've done here and the content we've provided here, but is also able to be quite flexible, answering questions within that general area. And, you can do things like, please put this in a table for me. And it'll put it in a format that's easier for you to share with your team. You can ask it a question like, we're 3 employees now, but we're going to be 20 in a year. Which of these is best for me? And it'll save that context. It'll give you a personalized recommendation on that. So what we've been doing with this is trying to get you as close as you can to the experience of having an expert on your team who can guide you through this process so that when you're ready to go here and say, let's go and let's choose this Gusto plan, we're going to provide you a discount if we have one available for you. You're going to get the best price. But more importantly, you're going to have thought through all of the different scenarios here. You're going to come in here feeling prepared and not feeling like you're going to make a mistake and have to redo this work 2 years from now. Anyhow, I hope you'll check out the website. Hope you'll let us know what you think. Launched 3 months ago, changing all the time, adding new products all the time. But it's been awesome to see the feedback so far, and hopefully we get a lot more. Thanks. I'll pass it back to you, Alec.
Thank you very much, Andrew. And really great introduction to Haystack. I hope it is a tool that all the founders, on today's call take advantage of, because it can really simplify the discovery, comparison, and ultimately purchase process as you're, selecting the financial tools you need to build your business. And before too long, we'll be seeing more and more tool categories on there, so you can have help with your AI concierge, comparing and discovering any type of business you need for your startup. But with that, it's my pleasure to welcome up our next speaker, who is the CEO of DigsFax, Nishant Tomar, to share some information about how DigsFax is transforming fraud detection and the identification of financial crime.
Thank you, everyone. So, Nishant Tomar, I'm the CEO at DixFact. I'm not sure how many of you have seen the 2002 sci-fi movie, Minority Report. But if you haven't, just a very quick high level in that movie, they show how they use something called the precogs to determine when, where, who is going to commit a crime. And then the pre-crime unit goes there and stops it from happening, right? Nutshell, that's the basically that's what the movie is about. So we have taken that concept of the movie and brought it to life in the context of financial crime. We have built 2 AI models using generative AI that can prevent any financial crime like fraud and money laundering from occurring by putting the transaction on hold before it can complete with 99.7% accuracy. So I don't know how many of you have seen the numbers, but the threat of financial crime has been rising continuously, which means there is that looming risk of significant financial loss, not only for individuals, also for businesses as well as the government. And then there is also that reputational damage risk every time there is a news about some kind of fraud or money laundering that happens. If you look at the numbers, it has been constantly on the rise, whether you think about it from the number of incident perspective or the financial cost associated with each of these incidents. At a cumulative level, the cost also has been increasing significantly. And this is all happening while there are so many solutions out in the market, right? So if you look at and just Google, like, prevent financial fraud, and you will see so many solutions out there. But if you look at how most of these solutions work, pretty much most, if not all of them, are leveraging identity-based verification and detection. So beyond the KYC and AML approach, even the ones that are doing the transaction monitoring are relying on identity-based detection. And a good example of why that is ineffective is some examples of data breach, like the 2017 Equifax breach, when they had personal data of 147 million individuals, and then they can use that data to basically evade all the existing safeguards that are trying to rely on the identity of the person, and it sees a normal person like you and me. It thinks everything is fine, and it can easily be fooled. So we have taken a very different approach to this. We have basically created a model that looks only at transactional information, at transactional data. It doesn't look at name. It doesn't look at any of the personally identifiable information. And it can still detect a potential threat in a transaction with very high accuracy of 99.7%, as I mentioned earlier. Also, it's really fast. It can do so in less than 1 millisecond, which means it can be leveraged not only in your typical ACH and wire, but also in credit card, debit card, real-time payments, any of these other much faster transactions where the requirement to detect these is in a very short span of time. And then we have also gone ahead and developed the model using Gen AI so that it is constantly automatically evolving and learning, and it can predict the new crime patterns and techniques over the next 6 to 12 months based on what it's seeing, the kind of threats that it's seeing today. And that allows our model to stay one step ahead rather than always playing catch up. Traditionally, what happens in most models is they have fixed set of rules, right? So anytime we hear about a new incident that has happened, then those companies go and then they update their set of rules, and they're like, oh, here you go, we have a software update and you install this and it should take care of the recent incidents. In our case, the AI model is constantly looking at and building dynamic set of rules, which is constantly evolving, and it's also trying to understand what can be the new crime patterns and techniques over the coming months, and then it creates new dynamic rules for that as well. So it's never playing catch up, it's actually one step ahead. So I covered most of the different differentiators already in terms of like the high accuracy and the approach we have taken. Not to mention the real-time transaction and how fast it is. Typically what we have seen is anything less than 70 4 milliseconds should do the job, but ours is less than 1 millisecond, so we're way below the threshold for being able to incorporate us in a real-time payments as well. And then the privacy preserving approach, there is a lot of concern about, of course, when it comes to financial data, you don't want to share more than what's needed. And so we have taken the approach where you don't need to share any personally identifiable information at all. These are just some of the common use cases that I'm sure most of you are already aware of. This is not an exhaustive list, but it does emphasize majority of the fraud that you do see happen falls under one of these categories, but there are more. There are others, and our model can actually handle pretty much all of these different use cases. Just to give you guys an idea of how it typically works. So basically at the beginning of any transaction, whether somebody is swiping the card or they're logged into their bank and they're initiating an ACH or a wire transaction, it can be domestic, it can be cross-border, it can be between multiple currencies, digital or fiat. None of that matters as long as it involves movement of money. The transactional data is fed to our models, and we have built two distinct models. One is to detect fraud, the other one to detect money laundering. If both of them are green, meaning they don't see anything, then basically the rest of the transaction happens as usual, right? But if either of them sees something unusual, something abnormal, and it detects there is a potential fraud here, then it's going to put the transaction on hold, and then it creates an explanation of why this was detected as a fraud, let's say, for example. And that explanation can be formatted in whatever choice our customers want. It can be Excel, it can be PDF. And it's handed over to the team that basically takes further actions after these kind of frauds are detected. At the same time, we also take the data for these kind of situations and then pass it to our own model for that continuous learning and evolution. And with that, I think that's all I had. If you have any questions, please feel free to reach out to us at this email, and I'll be happy to spend more time and answer questions. Thank you.
Thank you very much, Nishant. Really exciting to learn about DigsFact. It feels like every single day there's a new, fraud detection technology, and the rate of evolution is so fast right now. Exciting to see what you're doing at the forefront of it, especially in a privacy-driven, and compliant way, because there's nothing, starting with Minority Report always is a little scary and concerning, but it's amazing what you've been able to do abstracting identity away. So thanks again, Nishant.
Thank you.
And with that, we're ready to move on to our next content session. We are going to be joined now by Pat Kondo, the serial founder and CEO of Seekr Technologies, to share some of his perspective and experience on launching and growing AI companies. We're also joined by Rich Haruska, the COO of the Tim Knetz family office, who will be leading this discussion. Rich, the floor is yours.
Hello from Tampa Bay. Again, my name is Rich Haruska. I have the pleasure of being the Chief Operating Officer of the Knetz family office. We're a single family office locations in Tampa Bay and also Iowa. For the purpose of this audience, we just started making venture investments about a year ago. We've made a good handful so far, and 3 of them are already unicorns. We're pretty excited about that. So Pat, I'm honored and thrilled to have this fireside with you. It just kind of makes me think a year ago, I was actually in the Seekr deal room doing due diligence and kind of, vetting it that way. And here we are a year later having this awesome conversation. So how much time flies by. And for the sake of the audience, I just want to share, we're kind of breaking this conversation into kind of 3 key parts. First, kind of understanding a little bit more about Pat and Seekr. Second, we're going to turn into kind of FinTech and AI, which I know is a key focal point of this group. And lastly, I'm sure many of the founders in this, conference have a lot of thoughts and want advice on seeking capital, seeking, customers, and no pun intended on the seeking, but Pat certainly has some great insight and intel there as well. So without further ado, Pat, I want to kick it off to you and just have you give a quick background on yourself and, just a little bit about your background.
Sure, Rich. It seems like it was longer than a year ago, but here we are. And I have to say, you did one of the more thorough due diligences I've seen. So congratulations to that. But yeah, I started out about 35 years ago. I went into defense and intelligence contractors, Northrop Grumman, Harris Semiconductor, and kind of worked on navigation systems for space and missile platforms. Did that for about 7 or 8 years. And then Allen and Company in New York came to me and asked me if I'd be interested in building. They had purchased a technology company, which they didn't know why they bought it, and it was really the beginnings of search technology. It was based on pattern recognition, and it did all sorts of things around signal detection. And I thought it was interesting, so I went into it, and here I am 30 years later, still, in the same business. It has changed dramatically. I've formed 5 companies since that point. 2 of them I've taken public. One that I sold to Intel for over $1 billion when it was a real billion. And second, another one that became the largest supplier of search technology for defense and intelligence business. And now here I am. I started Seekr about 5 years ago, and it really, kind of brought together all the things that I've really done in my career into this new company, Seekr.
That's incredible, Pat. Congrats on all your successes and for being here with us today, and look forward to digging in deeper. It's interesting you say what $1 billion used to be, right? How the world has evolved. I'm still proud of the 3 unicorns we have in our portfolio, but I realize in this day and age of valuations and where we're at, so we're going to dig into that a little bit more. But could you share a little bit more with the audience, kind of the inspiration behind Seekr? What, after having 4 companies before this, what got you kind of compelled to say, I'm going to go back in the ring and start up another company, and just share with that journey and how's the vision evolved over time? And, I'm sure the audience would love any pivots along the way as well.
So 2016, I was in London, and I met up with some friends of mine that worked for GCHQ, which is like the NSA of the UK. Mm-hmm. And they said, hey, did you see what happened with Brexit? And I said, yeah. And they said, did you see what happened with Cambridge Analytica? And I said, yeah. And they said, well, the same thing's going to happen in the United States. And I started to think about that, and I said, looked into it a little bit more, and I said, this is an interesting problem. As the internet has grown, so has the percentage of what I would call coordinated inauthentic behavior, where deceptive information or false and misleading data is beginning to grow at an alarming rate. And what could we do about it? And when you think about search, and you think about profiling, and you think about all those aspects, a big part of that, to give search results, you have to score data. And I said, what if we could apply everything we knew, plus all the new things that we're doing in deep learning and neural networking and AI, and come up with a way, to understand the content, score the content, and then do some good for society and make people aware that everything you read is not perhaps what it should be. Right. And then how damaging is the impact? And so we did a little more research, and we found that, of course, the biggest impacts are in your financial systems, in your systems around health, and in politics. And we said, well, let's explore this a little bit more. And so the inspiration was doing something good for society, but trying to solve a problem that we could see growing that would affect everybody downstream. And then the final thing that we did was we accurately predicted that as AI began to emerge in more of a consumer models, that the ability for somebody to create new content at a scale that's never been seen, and whether it's mischief or true malcontent, it's going to be destructive. And so Seekr was really born out of trying to solve that problem, and then providing people with the tools and the technology to sort through the bias, the errors, what we call hallucinations, to really build a model today that can, be effective for them, either driving more revenues or preserving their brand or securing, new customers, any of those different things. But it all comes down to having trustworthy information and data to base your product on.
Excellent. And you mentioned, by the way, that you sold a company previously to Intel. One thing that dawned on me as I got to learn about the Seekr story was how they were reconnecting with prior companies and founders of theirs and wanted to understand what you're building today. I'd just be curious to get you to share with the audience kind of the importance of them seeing the behind the scenes technology and the underworkings of what you're building and how that mattered what you do today.
So so technical companies that are technology companies, the very first step in any diligence is not the business, it's the technology. Does it work? They've all seen a million PowerPoints. They can see everything, but at the end of the day, they want to test it. They want to run it against large volumes. They want to run it in the environments that you say it can run in. They want to see if the problems you say you can solve, you can solve. So the rigor involved really when you're dealing with another tech company is almost the not invented here syndrome, where you have to go through and prove that you can do what you say you can do, and you're an expert in that area. And that's what we had to do with Intel and with all of the technology partners. And once we were able to do that, the business propositions naturally flow.
Right. That's incredible. You know, speaking of $1 billion and what it means today versus what it used to mean, you know, it's candidly, I don't know about the audience, hard to keep up with the large language model universe and all the players, and it's hard to keep up. You have OpenAI, Cohere, Anthropic. You know, I don't know if everybody watches Monday Night Football. They had a commercial with Jim Harbaugh on Perplexity. It was kind of a neat commercial. You know, all these large language models and, you know, a sea and a wide universe. How does Seekr, just to dig in a little bit, Pat, how does Seekr stand out from the crowd?
So its focus, and it's on a particular problem, and that we have all of the background and all of the tools and the assembled workforce to be able to solve, because we knew the problem was not small. It was present across all verticals, and we felt that the idea is solve it for a set of verticals, get lighthouse customers in those verticals, and prove that you can do what you say you can do and do it better than anyone else. And then once you can do it, you can expand vertical by vertical across the spectrum, because it's a common thread. It becomes more of a horizontal product as opposed to, say, a deep vertical. And that was the approach we took. So we stand out really as the only company today that can build products that can remove errors, bias, put trust back into the quality of the data that you then run through your model, but also give you the tools to be able to do that. So all of that is really kind of the functionality that we provide. How a customer of ours takes it, like OneValley as an example, and then built out their series of AI apps using that tool, were that when they did that demo that they showed you to bring together 6 or 7 different companies from the web, they sorted out a lot of garbage, because when you do a search result, there's people are putting popular content to the top of the list, not credible. And so part of the whole process was what OneValley showed you were the most credible suppliers of the information to be delivered to that customer base, as opposed to here's just a set of the popular data, which could contain, as they say, hallucinations.
Very good. Well, kind of evolve the conversation. I know a lot of the audience wants to know about FinTech and financial services, how it relates to AI. What kind of impact do you anticipate and see in the financial services industry and AI coming together?
Well, so some of the guests have talked about certain areas of where security is important, where privacy, where fraud, those areas are very important to the total picture. But there are other applications of AI that are also important. And so what we look at are things like in the FinTech arena, or let's call it finance vertical, what we're looking at is building intelligent agents and building rational agents, so that a consumer could essentially set up some tasks that they are interested in around finance or around personal finance or around their own wealth management or around, understanding content. And this then can evolve where you can create your own agents, and then the uniqueness of a particular finance individual or a firm becomes how well they use those agents. So intelligent agents that can go out and learn by experience, rational agents that can, build a portfolio or a profile based on your interests or your actions. This is where we see the broad use of these kinds of technologies, and companies like OneValley will start to develop those, and others that we're working with. So we're in a part of that is for those agents to be effective, they need to screen the data that is going into giving you a recommendation or giving you a suggestion or taking an action on your behalf. And that's where all of the signal analysis and detection that we do comes into play, because now those agents, you're going to now trust those agents. Today, you may not trust them to make a stock transaction or withdraw money from your bank account or, sign up for an insurance policy, but in a few years, you'll want to.
Excellent. And building on that, how do you handle kind of the ethical considerations, bias, privacy, a lot of sensitive data? How are you kind of attacking that challenge?
So we build in what the industry suggests. So for Europe, it's GDPR, and we follow along with what they want. In the US, there is a set of policies that are being developed. We're really an OEM to a customer who would implement those privileges and rules. And so when the system is designed, we expect that they would say, here's the group that has the privilege to see this, here's the group that doesn't, here's the data that needs to be obfuscated, here's the data that doesn't have to. So those rules, those privileges really are set, and then we put those in motion as we start to supply the technology, and then the kind of the confluence of those two things is what that customer will offer to the end user.
That's awesome. One thing I meant to say earlier is I really appreciate all the founders and industry leaders on this conference, because I view this as you're working on the business, not necessarily in the business. And there's that very struggle. I'm sure everybody's toggling back and forth and emails and texts and whatnot. But building on that, I want to be opportunistic a little bit in this call as well for the audience, for you, Pat. What opportunities do you see for future partnerships between Seekr and startups looking to leverage AI and your technologies?
So one of the interesting kind of phenomena that are occurring today is that when ChatGPT came out, enormous rush, everybody in the world is trying it and building mini applications on it. And the enterprise, the corporate customers were caught by surprise and stepped back a bit. So the first wave was all about consumer adoption and interest at that level. Then the second wave was that corporations started to get involved. And what they discovered, of course, is that there's all sorts of concerns as they start to build or look at deploying enterprise class products. And so lots of them have stepped back and said, I want to take a little bit of time to look at this. I'm going to go look at what Microsoft's got or what Google has or what Amazon's doing, and I want to evaluate this. And so we're now in a phase where it's cautious movement forward. People are looking at how much does it cost? What's the return on investment? How complex is this? Can I downstream? How can I manage it and analyze it? And that's where I think the opportunity is for many of the people on this call, because the ability to get involved now is wide open. You don't have to be ChatGPT. They're not going to take over everything.
Right.
There's so many different opportunities as this kind of wave goes to the next. There are people building extensions to products. There's people building new ways to deploy products. There's just so many things now, because it's clear that there's lots of holes in this wave that can be filled by enterprising companies that take the time to look at the problem, become an expert on the problem, and then go, offer a solution. I think it's a golden time for that. 2 years from now, it might be different, but I think now is the time. And somebody mentioned earlier that, there's more VCs now than ever looking at, what's happening in this space. I'd also offer one other recommendation, and Rich is a perfect example. There are family offices who are extremely active in this space. There are something like 40,000 family offices that have, net worth of $1 billion or more that are investors. And I would tell you that again is an opportunity to take advantage of.
No, that's excellent. And before we turn into kind of one of my favorite segments, which is kind of, the advice for founders in the room, anything else on the FinTech and AI side that you wanted to offer, Pat, or anything?
No, I think, look, it's the challenges are in those two arenas are well known. It's what is the provenance of the information, what's the lineage, and what was the objective. And in all cases, having an understanding of that data is going to give you the ability to get results that can be measured and can be trusted. And I think that's a common thread, whether it's finance, whether it's healthcare, whether it's insurance, anything that has to do with money or health. Those three things are invaluable to providing a solution to a customer.
Excellent. Love it. I think I've shared with you before, Pat, in a prior world, I helped lead a technology accelerator. And every time I'd sit down with founders, we'd have a lot of topics, but they want to know about capital,
Yeah.
and capital, right?
Yeah.
And you've built many companies, you've fundraised for them in different ways. I found your approach to Seekr was refreshingly unique, and one of the reasons we leaned in, and I'm glad you've evolved from where you were too. So yeah, can you just share a little bit of the Seekr fundraising journey and just tips on fundraising overall?
Yeah. So when I first had to fundraise, it was the hardest thing in the world because I had never had to ask for money before, except for my father, who would always say no. And so when I had to go fundraise, I found it was a real unique skill that people had. And so I didn't know how to do it. And I was fortunate that the bank that I worked with, did a lot of it, but I sat and watched how that got done. And it's a real art how to do that. And so I've raised money publicly through, raising money as a public company. Privately, I've raised money through, investors and VCs. But when I went forward here with Seekr, I decided that, having gone through all the things I've gone through, that this idea of raising money through family offices, high net worth individuals, that channel has now come alive. 20 years ago, it really didn't exist. It was hard to find. Now it's a real lively channel where family offices and high net worth families have decided to do their own investing. They're smart enough to do their own diligence. They hire people that are experts in that from all the big funds, from all the big fields. And they are really, sometimes they are first movers because they are people that built their own companies. They're first generation builders, and they know what it takes to build a company. And they look at, who's in front of me, and am I going to trust this person with my capital? And what is it that it's about them that is reminds me of me, so I'm going to invest. That's not the same as a VC. That's not the same as an institution. They're managing somebody else's money. Right. This group's managing their money. And there's a big difference.
Now, building on that, I remember you had shared that one of the strategies was that you believed the minute you go to that next level, there's going to be more perspectives, opinions, et cetera, which there's a lot of good, but you were also trying to build out the model, build out the company. So if I'm understanding, you were pretty intentional with not going the level of institutional too early on, right?
Yeah, I felt like that I had, at this point in my life, in this point in my career, that I had the right idea and that I was headed in the right direction, and I had, synthesized everything that I needed to do to get to that point. And there were lots of doubters along the way. I can remember when I first announced that we were going to go in this direction, half the company kind of moaned and quit. But I didn't care because I knew it was the right thing to do. And so, you have to have I think, the strength to be able to do that. And lucky enough that I've been around a while. I had great friends, great advisors, great mentors. I know a lot of people are very young that are looking to do the same thing. And that's a huge advice that I would give you, is find a mentor, find somebody that's done this before, that can sit there and give you the confidence or give you the assurances to go be bold like that, because oftentimes you can bend to somebody else's point of view because you think it's going to satisfy a short-term type of scenario, and then it won't work. Your company won't work. So that's a big piece of advice that I would give people, is if you've got an idea and you've done the work and you're the expert, stick with it and surround yourself with people who will be supporters.
Yeah, one thing I just thought about, Pat, and I think it's relevant for this audience, is, of course, investors are expecting you to show your trajectory and hockey stick. They're expecting the technology to be there. There's a lot of high expectations. There's more investors, but the game has evolved. So I really think the temperament, the culture of the team, the founder themselves really matters. And one thing I wanted to share with the audience, my first time meeting Pat after we had already made a decision, and this was before we did follow-on rounds. We sat with him for a good 2 hours. Just imagine, each of you, how busy you are, how much of a founder like Pat is busy. Never once looked at his phone, never once went into, he just spent quality time, and knowing he had 50 other things to do, and partners like Tony Robbins that call him here and there, like just so many things going on. And you could just sense the culture of the team too. So, they always talk about, are you betting on the jockey or the horse? Certainly we like the horse in Seekr, but certainly Pat, John and team were a big part of it too. So, one other thing I would share briefly is they were very open and transparent. If they didn't have the perfect, crystal clear answer on something, they shared it. They were open, transparent. So it's interesting. Pat talks about trustworthy AI. I also believe for each of us, we have to be trustworthy in how we communicate with prospective investors. So we're almost near the end of our time, Pat, and it's been a great one. We talk about capital. Well, capital can come in other forms like customers. And I realize, chicken and egg problems sometimes, but can you share your approach to and advice for founders and getting your first, enterprise customers?
I think that's really important, is to get a customer. And I think you have to do almost whatever you have to do to get that one customer. Some people might wince at the idea of giving somebody some equity, giving them some upside, giving them some special attention, doing, some things that, might be difficult. But once you have that, and it has to be the right customer, and the customer should agree that once you've kind of gotten to the point where you've proved your thesis, that they become an advocate for you. If you can get that, and that customer is somebody in a segment that is important to you, it's the most important thing of all. Because in today's world, technology is talked about by everybody, but it comes down to, well, I can't understand all of that, but I can understand. Do you have a customer? Do you have two customers? Is anyone paying for this? That becomes now the only benchmark, that when it gets too technical, it's the only benchmark that works.
Awesome. And closing question, we always like to end with, general advice to founders. So I'm going to have a fun one with you here, Pat. The Pat of 5 companies and a few gray hairs, if you was to give the Pat as a younger entrepreneur, you're still young in spirit, but you get my point. What would you say to the Pat and many founders in this room just getting their start?
Well, I think that you don't give up. I think that there's plenty of parts of the journey where it looks like you should give up. I'm a person that, had a straight line up until it went down. and I wasn't accustomed to that. And, during 2007 through 2009, I, went through a pretty difficult period, but I didn't give up. I, did whatever I had to do to keep going. So I think if you give up, you'll regret it. So if you choose to go down the path to build your own company, don't give up on it. You have to just keep going and find every way to accomplish it, and you will do it because lots of people give up. So you've got that benefit that it's only a small percentage of people that don't. But if you get through that, you win.
Awesome, Pat. Well, thank you again for taking the time, and
my
appreciate
pleasure.
what
Thank
you do
you.
in the community, and looking forward to hearing the continued growth of Seekr.
Yeah.
Thank you.
Yep. Thanks, everybody.
Thank you very much, Pat and Rich, for the really insightful conversation, and especially for the advice to the founders that are in the audience here with us today. Pat spent a little bit of time sharing about Seekr and the work that they do, their end-to-end data platform, and how companies can leverage it. If you ever want to take advantage of Seekr's platforms, you want to connect with their AI advisory team, you can use the QR code on the screen to schedule a consultation with one of their AI experts. But incredible team, our trusted AI advisor for our AI initiatives, and a great platform early stage founders can look forward to using. Now, up next, we have our panel discussion focused on building AI models for financial services. We're being joined by Nick Sabarol, VP of Product at Seekr, Alec Vigilante, the Managing Director of Novarian Capital and the former Director of the FinTech Research Center at Fidelity, and Sam D. Paola, the President of Evergreen Advisors. They'll be looking at what startups need to consider as they develop AI solutions that can be successful in product development, early customer acquisition, and fundraising. I'd like to now throw it over to our moderator, Tara Coleman from OneValley, to get us started.
Thank you, Alec. I'd like to welcome our panelists and just share how personally excited I am for this panel. I've spoken to each of the panelists separately, and everyone in their own right is just a fantastic contributor to this conversation. But together, I think it's truly going to be a magical conversation. So with that, I would like to give everyone on the panel a chance to introduce themselves and their backgrounds. So if we have everyone here, Ale, I'd like to start off with you.
Yep. Thanks, Sarah. Can you hear me okay?
Yep.
Perfect. Ale Vigilante. I started my career as one of the first non-founding employee in an internet startup around 2000. Then went on to do corporate strategy in telecommunication. And one of those telco company happened to be owned by the Johnson's family, who are also the owners of Fidelity. And for the past 14 years, I've been with Fidelity, first building the enterprise scouting team worldwide, and then running FinTech research. And last year, I decided to do something different, to get out of my comfort zone, and I joined a secondary VC fund, where I am right now, Novarian.
Thanks, Ale. Nick, would you like to go next?
Yeah, that sounds great. Can you hear me okay?
Yeah.
Perfect. So I'm VP of product at Seekr, where I lead product development, product strategy, and design. I've worked in AI for about 5 or 6 years. Worked in product at AWS AI, where I took on time series data as well as computer vision. And then at Amazon, I also led a portfolio of generative AI products spanning across Alexa, AWS, and Prime Video. Some of the focus areas were transcription, translation, text-to-speech, and generative video. Then, right as LLMs were becoming very mainstream and very interesting for companies, I spent a year consulting, helping executives to understand what LLMs were, what the value they offered was, the opportunities, and how to integrate those into roadmaps. And now I'm at Seekr, working on explainable, trustworthy AI, which I think is one of the most important and thorniest problems in AI right now, and critical to get right for finance.
Absolutely. Sam, last but not least, can you give a little overview on your background?
Yeah, but it looks like we may need a little AI to fix some video. Sam DePaul, I'm currently president of Evergreen Advisors, which is a advisory firm and an investment bank focused on middle market and emerging businesses. So providing services, not only CFO outsourcing services, acting as CFO, valuation services, but we help companies realize their goals through executing capital raise and M&A transactions on their behalf. In my career, I've been an investment banker. I've worked in corporate development, and I've even been a CFO and a lead of a commercial banking operation at a large bank. So the understanding how the impacts of automation and AI on financial services, I think I have a pretty wide view of where that can impact.
So what I love about this group specifically is the different backgrounds you all come from and the representative experiences we have at the table. We've got the institutional finance side, we have the capital side, we have the product side. So with the three of you, we're really able to paint a clear picture of what it means to be a founder building AI into their products. So I'm very excited to get into that conversation. But first, I'd like to kick us off with something a little fun. My question for you is two-part. First, what is the most exciting use of AI that you've seen in FinTech? And then two, what's an area where AI maybe hasn't quite entered into play yet, but that you think will be really game-changing once it does? And Sam, I'd like to start with you with this question.
The first use I saw of it was really automating and managing, centralizing decision underwriting at the large bank I worked with. So utilizing early stages of really machine learning, I would call it, and maybe they're analyzing and utilizing patterns to come up with good underwriting decisions was sort of the first interesting. Maybe it was interesting because it was the first mover of utilizing AI. I think where it could be a game changer, something that's probably near and dear to most folks doing large transactions or working with large financial institutions, is fraud detection. So being able to analyze massive amounts of transactions, detect patterns, and actually find fraud before it becomes a significant issue and maybe stop it at it before it starts, could be a potential game changer.
Definitely. Ale or Nick, either of you really jumping at the bit to jump in as well?
I can go next. I think a really exciting application for AI in finance right now is personalized financial advice. And so taking something like an LLM and then fine-tuning it with obviously all of the different regulations, but also information about your specific products. So you have an AI model that is kind of trained on what you can offer customers, and then combining that with something like semantic search or intelligent search. So somebody could just type in something like, I want to retire in 20 years. What products could help me? And even if they aren't hitting the right keywords in their search, all of your products will be surfaced to them in a meaningful way. As far as what I think is interesting that comes next, I really think like autonomous agents are going to be a big thing. And so whether that's in like customer support interactions and everybody is connected to the financial market more or less. And so being able to handle all those requests that are coming in without constant human in the loop intervention, or even something like what Sam was talking about on compliance and risk management and fraud detection, giving those agents more autonomy in the workflow, I think is a big next step.
Yeah. So from Sam and Nick, we've got fraud detection and customer experience. So Ale, where are you coming in?
Nick, if you're looking for a company that does what you described in terms of financial advice and so on, I got one for you. So that's an area Tara, where I think it's one of the most interesting areas. Actually, I'll go off a tangent here. I'm a productivity nerd, and I've done this sort of Mochari method of productivity. Matt Mochari is the executive coach of Sam Altman, Brian Armstrong, and so on. But you can either pay $15,000 a month and do the coaching with him, or you can actually go online and see his methodology. There's one startup that has actually implemented the Mochari method to manage email. And I'm using that startup right now. They are at seed stage. Actually, they are just raising their seed round right now. And the way I manage email has changed forever. So that's a tangential use case, but it really shows that what AI can do for you.
Ale, I'm going to ask you to send me that company after.
Yeah, it's called Fixer. FYXER.ai. Fixer.
Thanks. Awesome. Well, now that we've kind of painted the picture of what we find exciting in the financial world, I kind of want to pivot the conversation a little bit more towards all of the startups in the audience today. They're all thinking about, how do I build, sell, fundraise, all these AI products. And so I kind of want to direct the conversation into 3 sections, starting with product. So Nick, you're the most frontline rep on the panel here when it comes to the product development side. We know from earlier discussions how Seekr is especially conscious of the ethical and trust implications of AI in scenarios of highly regulated industries, especially in FinTech, as we've discussed. So I want to hear from you, what are sort of the unique technical challenges that you've found in building AI models for financial services as compared to other industries? And how can startups be better prepared to handle those challenges?
Yeah, great question. I think the unique challenge in the financial industry with AI is really the quality bar, because the cost of a mistake is so high. And I think there are implications of that. And so one is that these massive models off the shelf that have been trained on all of the data on the internet are typically trained on very popular, very available data, not necessarily accurate data. And so the vectors of hallucination are just endless there. And you could end up offering financial advice or financial services based on the opinion of some Reddit blog or tweet or who knows what. And so I think it's critical to understand the data going into your model. And at a minimum, if you're going to use those off-the-shelf models, look to fine-tune those models on a reliable data set. I think a second consideration here is understanding where your model may be hallucinating. And so those mistakes are costly. You want to detect those, and you want to get a human in the loop to remediate those. And then I think the last thing founders should be mindful of is finance is a very heavily regulated industry. And so guardrails are really important. And so not just getting the right information to train the model, but also making sure that the inference coming out of the model is staying within specific boundaries and not getting you or your customers into any trouble.
Yeah, makes sense. It is a very, sensitive industry. It's, people's livelihoods. So the risk is really high. And it kind of, what you're saying about the data sets being reliable kind of brings me back to our first conversation with Sarah Biller from FinTech Sandbox and the data that they're using to support early stage startups in this space. So it seems like there's a common thread there in all of these discussions. Ale, Sam, do you have anything else that you'd like to add on the product side?
I'd say I'll probably piggyback, Nick, on what you said in terms of regulatory, and I'll make it a matter of credibility that you understand what you're dealing with. And I usually translate that into 2 things. You can either attack it with badges being a broker-dealer license, an RIA license, SEC compliance, whatever that is, or you can attack it. You can attack it with people that understand that problem inside out, not just the solution. And I'll give an example of this, Tara. I recently met a company that is helping VCs like us doing due diligence on private companies. And I basically built a model that they say can basically digest all of the documents from private companies and give you the highlights and so on. However, the problem I have is that nobody at this company has ever done due diligence. Nobody has ever seen a 409 evaluation. Nobody has ever seen the bylaws of a private company, formation documents of a private company, cap table. Nobody has ever run a waterfall. And like you could have built a phenomenal technology, but you give me no trust that you understand the problem you're trying to solve. And therefore, I cannot trust the solution you are delivering, despite being technologically possibly perfect. I cannot trust it's a critical activity. So, and despite Nick not being regulated, so being in a almost totally unregulated space that the private company is investing, that to me is something that should be addressed pretty early.
Yeah, I can piggyback on that. I mean, and I think I caught the end of Pat Condo's comments on the last discussion about finding your first customer. And these solutions impact, in a lot of cases, critical processes within these large institutions that are regulated and that whose reputation depends on running high quality processes and customer interaction. So just enhancing a process or technology for technology's sake isn't necessarily going to sell the product. There needs to be a thought on ROI and truly how you're adding value to that process or to that customer interaction for all of these institutions.
It's almost like a right answer that's not explained well is kind of like a wrong answer, because you can't trust it. And so it's like on a school test, if you just write down the right answer, but you have none of the information to back it up or none of the reasoning, you actually don't really get the question right. And I think it's the same if you're trusting your financial decisions to an AI system. You want to know why it made that decision, how it made that decision, and if you can rely on it.
I love that analogy. And Sam, thank you. You gave me a great little volley to our next question, which is around kind of finding that first customer. And I want to direct this question first to Ale. We first met back when you were leading the FinTech research group at Fidelity, which was really impressive with the way Fidelity was thinking about working with startups and planning for the future of AI at the time. And as Pat and Rich touched on earlier today, securing that institutional customer partner is top of mind, and as Sam just mentioned as well. So can you talk a bit about, other than what we've just discussed and sort of the explaining side and kind of the trustworthiness of the data and the trustworthiness of the explanation of the data, sort of how founders can better position themselves to be successful in working with large organizations like Fidelity?
Sure. So the first thing is that I think that there are three different categories of use cases, and you first need to understand in which category you fall before you decide how to approach it. The first category is you are addressing a cost center of the customer. Cost center being direct tech that Sam was mentioning before, for instance. So KYC, AML, all of those functions. The second use case could be something that is not related to the vertical operation, but more of an horizontal function. Email management, meeting management, having the ability to schedule meetings more efficiently, looking for the right person to do a particular job based on their skills, their code base, and so on and so forth. And the third use case is you are actually addressing the profit center of the firm. So in the case of an asset manager, you're actually looking into portfolio building, into fund building, into fund management, and so on. So this is really the core of the business, the core of the business function. And the reason why I'm saying there is a different approach is that, first of all, for a cost center, the problem you have is that your solution might very well be so the ROI, Sam, that you were talking about, your solution might very well be a tenth of the cost of the current solution. Take RegTech. For RegTech, scaling is very easy. You basically hire more people, possibly offshore. Your solution is going to be applied in a non-green field environment, in a brownfield environment. Therefore, what you will need to look at is not only that your solution might cost a tenth of the current solution, but that implementing your solution implies a certain cost. At the bottom line is that this is a J curve, and the customer will not just look at your solution saves me 90% of the cost at scale. Fine, but how deep is that J curve at the beginning? So what does that implementation cost? Because if that implementation means that I need to spend 2 years implementing your solution and at the same time keeping the cost base that I have with all of that offshore RegTech people, then it's not saving me anything. Before I see the savings, it will take a while for the J curve to hit the x-axis again. For a profit center, the story is similar, but with a different angle. The J curve is not really about the cost, but it's more about the culture of the firm. Take an asset manager that is putting on a pedestal active fund managers takes forever to implement passive index funds because they believe in something totally different. You show up with an AI that can actually perform the same job. You go against the very culture of the firm. So the problem you have there then is that you need to decide, how am I going to approach this market? One way is to become a total substitute of that fund manager. So Nick, the company I was mentioning before is called StreetBeat. StreetBeat, for instance, allows you to actually build with natural language to build your own portfolio. How much does a fund manager want to see this solution being put in front of investor? Absolutely zero. So what you need to decide is, am I actually going to go in that direction, or am I rather going to reframe this solution as a co-pilot for the fund manager himself? Therefore, I do not go against the cultural current of the firm, but I actually help that culture evolve towards the vision that I have. That's about it. I could go on and on, but that's my idea.
Yeah, no, it's really interesting. Things that maybe not be top of mind for a startup. It's like, well, I have this solution for you. I'm going to save you all of this money. But to your point, the cost of getting to that point may kind of outweigh the benefit of reaching, point B.
Especially for somebody who's managing a cost center, basically whose mandate is reduce cost. Take all the light bulbs and make them LED. Sure, but LEDs cost 10 times as much. How am I going to do that?
Yeah. Nick and Sam, any quick remarks as well on the customer acquisition side? I'd like to get into fundraising next.
I love everything Ali said. I think, and like just getting specific about the problem you're trying to solve. And especially with a big customer like Fidelity, like the best way to grow with that customer is to solve a very specific problem for them, understand kind of how their financial incentives work, and then use that to sort of sell further into the business. And so like 5 questions I always use that I make sure I am like crystal clear on: just who's your customer, what's the problem they're trying to solve, how are they solving it today, what are you proposing, and why is it better? And so I think if you go through those, you're in pretty good shape with any customer, but especially a big sophisticated customer like Fidelity who really knows their business.
Yeah, I go back a little bit to a successful business that I saw that solved a problem because the problem was developing and new. It was around managing HSA accounts. It was essentially a payroll deduction problem and then a transaction problem, along with managing the assets of various HSA accounts. And the specific solution around that allowed the company to penetrate into very large organizations. Their initial customers were Fortune 500 businesses. And from there, once they got into the HR department and the finance department, it was payroll management, they were able to offer other solutions that were more mission critical to the business. So, finding a path in, finding that gap, where the customer has a true need they can't solve, which may not be a mission critical element, gain the trust, and then expand the offering seemed to be a good strategy.
Yeah, absolutely. The sort of land and expand model. Awesome. So I want to transition briefly over to fundraising. It's the first question we get from founders, as I'm sure you can imagine. So for the companies that are thinking, how am I going to raise my next round? How am I going to exit? What's the future of my business from a funding and an exit perspective? What advice would you give FinTech founders here today as it relates to that question? And so, Nick, why don't we kick it off with you?
Yeah, I think just make it interesting for them. And so really highlight the things they care about. And so a strong vision and a strong pitch. Make sure you're talking about how big the addressable market is. If you're building financial software for companies who make custom notebooks, it's not a big enough of a market potentially for a VC to get excited who wants a 10x or 100x return. And then just make sure you understand your unit economics, like how much a customer's worth to you, how much it costs you to acquire that customer, so you can prove that the business will scale. Lean into the strength of your team. It's something that investors care deeply about. It's really what they're investing in a lot of cases. And so highlight your team. Don't be shy about that, and have a very clear plan for what you're going to do with the money. And take that obligation of raising a bunch of debt or or selling some of your equity and having a partner take that very seriously.
Sam and Ale, I'd like to, same question to you, building off of what Nick said, but also with the lens of how is AI going to change the way you both are sourcing deals in terms of the companies you're investing in, the volume that you invest. So two-part question for both of you. How can startups prepare themselves and think more about funding? And then also, how is AI going to change the way that you invest? So Sam, why don't we start with you?
Yeah, so I think there's various stages of fundraising, right? And I think Nick is on point. You got to have your message, especially at the early stage, seed round financing. Have your pitch, sell your people, know your solution. But that is more. I don't see how it's going to be difficult for maybe getting the message out and having angel investors be able to sift through more opportunities just to meet initial criteria at the seed level. When you get into your when you start revenue production, you get into A round and the later rounds, having quality financials, a quality presentation about the scalability of the business and the return potential of the business really helps at that level. So whether that is an accountant or having an outside professional prepare those not only financials but pro formas moving forward, so that folks can analyze whether or not that opportunity fits their return models and needs for their specific fund. And how AI obviously is going to impact that is, if that data is available and that data is of quality, it will allow investors to sift through more opportunities and pick those that really fit their return goals and their return models. Mm-hmm. It could really enhance the start to fund process, especially in those more strategic A rounds and above, it being AI.
Yeah, absolutely. Ale, anything you'd like to?
First I'd like to add what Nick said in terms of the looking for funding, and I can think of four things. The first one is show that you understand the problem, show that you really deeply understand the problem you're solving. Second, show that you have a superior solution for that problem, because you're digitizing something that was manual, because you're speeding up something that is typically slow, because you're substituting a human with whatever. The third one is show how you're going to make this profitable. Show the attention to the economics. Nick, you were talking about this as well, but this is particularly important in this environment. The fourth one, and this might not be popular with founders, don't get too greedy about valuation too early. Somebody that comes in and gives you a phenomenal valuation for your early stage company, you are creating yourself a problem for all future stages. Because when you're going to raise again, I'm not sure you're going to find another VC that is so. You see where I'm going with this. You want to avoid the down round at all costs, basically, or a flat round at all costs, and you don't do that afterwards. You need to think about it now. Then, when it comes to managing the deal flow, Tara, I actively use actually AI in two ways. The first one is in building my investment thesis. I actually have a ghost reader that so I use the Readwise app, Readwise as a reader, and the reader as a ghost reader embedded into it. So anything that is interesting for me, I have on my RSS feed on Readwise, and everything that I save from my RSS feed is summarized by the ghost reader. So digesting everything that I want to read today, it takes me today probably a fifth of the time that it used to take me a year ago. The second thing is that I use I do use some tools, whether it's ChatGPT or I use an app called Obsidian that can basically build is integrated with ChatGPT and so on. But when I do due diligence or when I start building the investment memo, the investment thesis for a particular company, I use AI to basically make that very much faster. So if I want to know what is the credit score distribution of American people, today I can just ask that question and get that question answered immediately. In the past, so what would have taken me probably 5 minutes in the past now takes me 30 seconds just because of AI. Those two things I do today. The selection of the companies, no, not yet.
Yeah.
I have a friend who does that though. I have a friend who actually built an entire AI stack in the RVC firm to do the company selection, the first reach out to the company, and the scheduling of the first meeting. That's pretty impressive.
Definitely. I'm curious to know how that, how the longevity of that looks for your friend and if it impacts their return too.
Yeah, same.
Well, thank you all. We're unfortunately up on time. I have so many more questions for you, and I feel like I could stay here forever, but I really appreciate all three of you contributing your time and your insights. And I've enjoyed the conversation. I hope you all have, and I hope the audience has as well.
Yeah, thank you for having us.
Thank you.
Thanks. Thank you so much, Todd.
Thanks, everyone. Back over to you, Alec.
Thank you so much, Tara, and a special thank you to all of our panelists. A great discussion. Ali's perspective on kind of how to figure out how you fit into large financial institutions is amazing. The number of founders I talked to who have been selling into spaces, now for a year and a half without really understanding kind of how they fit into the operational processes or how they fit into the mindset of their financial customer it's just amazing. And that kind of clarity is incredibly valuable. So a huge thank you to our panelists. But we have a couple more sessions to keep going, so we're going to keep moving quickly. For this next session, we're going to take a couple minutes and actually give a hands-on case study where we show how Haystack AI went from idea to MVP and launch just over the course of a couple months through our partnership with Seekr and how we trained and fine-tuned our own proprietary AI model. I'm going to welcome Phil Marshall, Principal Product Manager at Seekr, as well as welcome back Andrew Wyndham, the product lead for Haystack AI to give some more information here. Phil, Andrew, the floor is yours.
Alec, thanks so much for the warm welcome. Andrew, it's awesome to be here with you. I'm going to clue the audience into something. You and I haven't had a chance to actually reflect one-on-one about the Haystack launch and how Seekr Flow really enabled so much success for you and your team and the hard work that you guys put in. So this is great to be doing it in real time in front of everyone. So again,
maybe we'll uncover something deep about ourselves. Good to reflect.
Or Seekr Flow.
Probably Seekr Flow would be more people here.
Cool. So for the next 5 minutes, as I said, we're going to reflect back on how you leverage Seekr Flow and the capabilities to launch Haystack. And then after that, I'm going to have about 5 minutes to walk the audience through some high-level steps of how they can kind of build the same kind of solution on their own and have some great things top of mind when they go to the platform. How does that sound?
Sounds great. Let's get into it.
All right, cool. So as you reflect back on that time, what are some of the unique challenges that OneValley and your customers face that kind of led you to seek out Seekr for AI expertise?
So when you're talking about the particular pain point we're trying to solve here and the process of like purchasing an enterprise software, it's a pretty long process for most companies. I mean, it's obviously very quick for startups compared to a more established company that has like a very intense acquisition process. But all the same, it's not like we're creating a shopping website for discount fashion where we can sort of like get people to get in a huge volume and click through a huge volume. You have to support a decision-making process that's pretty sophisticated, and it usually takes place over a long time. So we looked around and we saw the companies that were, providing help with this process, and we just thought it was insufficient. Like, G2 has great product reviews, but it doesn't get you all the way to feeling comfortable that like I'm ready to purchase here. So we knew we needed a more like we knew we needed essentially a concierge, an AI concierge. And as most folks know here, it's pretty easy to find like a really general AI. It's really difficult to find one that is not going to take you off. You have to value singularity of focus and reliability a lot more than like creativity and ingenuity. I don't care whether or not you can write me a sonnet, but I really need you to like give me accurate and up-to-date information on pricing, telling me something true about the thing I asked, not go off topic. So getting to a place where we had an AI model that was sufficiently narrow, trained, and deep, that was something we couldn't have done by ourselves. That was something we really needed the partnership with Seekr Flow to do.
Awesome. Yeah, that customization piece is really paramount to the principal alignment features we have baked into Seekr Flow. And obviously that's what propelled, I think, the bespoke product that you've been able to stand up in front of users, domain-specific knowledge about your product catalog and all the benefits and features and opportunities that those products unlock for startups and businesses and entrepreneurs. Cool. I think another thing that I'd love to dive into while we have a couple more minutes here is just thinking about those users and the pain points. If you can kind of think more about what's the feedback that the integration with Seekr Flow and the user experience, how has the user experience of Haystack maybe been enhanced by some of the bespoke customization and fine-tune model that we've been able to build?
Yeah, I mean, so I gave an example in the demo a moment ago about how you can compare plan to plan. And we found that like the folks who really engage with the product, who spend a good amount of time and who, statistically are much more likely to go through and purchase a product at the end of it, really appreciate it when they get that deeper level that they can compare small piece over here to small piece over here. So it just saves so much time. It's really difficult to service that information. And then to make like a comparison list and like do that manual thing on your own. But with what we've built, it's really simple. It saves a lot of time. So we're getting a lot of really positive feedback on the ability to compare and synthesize and make recommendations based on that. We're also getting a lot of really positive feedback on the ability to personalize recommendations. So like responding to what you put into it, understanding what your company is about, what its particular needs are, then matching that to something. That's another thing that you really like. We could have, before the days of AI, probably had a full-time content team saying, here's the right, accounting software for like startup FinTech companies. Here's the right one for startup, EdTech companies. Like we could have like generated millions of versions of this. It would have been so complicated, so expensive for us, taken so long. We never would have been able to launch like an MVP in a couple months if that was our model. So we're able to personalize, and then we're able to respond to like these really nitty-gritty queries people get into about like the details of these different plans.
That's awesome. I think it's a good segue kind of into the last thing, and we'll talk about remaining like 30 seconds or so. I remember being in a sync with your team earlier, and Alec, I think, said that, you guys never really had to adjust your timelines because once we got into the work of principally aligning the model, doing our ingestion, and really building out the whole pipeline, you guys were really able to not have to adjust your timelines and launch when you thought you'd be able to launch. I think
totally. I mean, I remember like we started talking about this in January, right? And when you talked to me in January, I had a pretty fuzzy idea of what we were building. We talked a lot about the problems, not a lot about like how we were going to actually solve it. So we went from there to like 2 months later, no, this is exactly how we want to build it, how we want it to work, to like 2 months after that, okay, it's live, it's out there in the world. It was really quick. It was kind of magical, honestly. Definitely not something that like definitely huge credit to the quality of the collaboration that we had.
Great, great. And the software is really an enabler of that, right? It allows for faster time to market, reduce costs once we do stand up a principally aligned model that leverages RAG when it needs to, because it's already infused with those principles, and it allows for that streamlined collaboration. I think that lends itself to those really quick timelines that everyone is just kind of surprised by at the end. So Andrew, thanks so much for the time today to reflect back. It's been great, and I can't wait till we connect again and keep driving.
Sounds good. Well, I'll talk to you soon, Phil. Thanks.
All right. Thanks a lot. All right. With that, I will kind of walk everyone through some great things to think about when you go to the Seekr Flow platform. What are things that you need to have top of mind? What are some best practices? How can you replicate the success that OneValley has had based on your own data and your own outcomes and principles that you want represented in a fine-tuned model? So let me share my screen. So we're going to leverage a regulatory compliance use case and come out at the end understanding how do you principally align a model using the Seekr Flow pipeline, implement some guardrails, and deploy and monitor an LLM that suits your needs. So here, I think today we're going to walk through the process of creating a compliance-focused chatbot, as I mentioned. So imagine you're an enterprise consulting firm. Clients need up-to-date information about financial regulations. And the aim is to create a chatbot that can provide information on the latest financial regulations, ensuring that clients have the most accurate information reflecting current regulations based on their knowledge base. So imagine you're a regulatory or legal compliance team. You might need quick access to the latest anti-money laundering regulations for cross-border payments. You're going to have a lot of information on that, and you need to have the up-to-date information to give your clients the best insights on that kind of assessment. So in order to do this, Seekr Flow leverages principal alignment. And the benefit here is that this totally disrupts the experience of data preparation by simplifying the journey and preparing data for fine-tuned models. It offers clear step-by-step guidance that you can see on screen, and it handles various data formats, both structured and unstructured, and provides transparency throughout the process. So the goal here is really to align a generous model with the financial regulatory compliance information that we think is super important. So I think here you would maybe want to consider the question. This exercise really needs to start with a use case and a question. And the question could be, what's the latest anti-money laundering regulations for cross-border payments? We have to ingest principles and compliance documentation and structure them into a hierarchy or a knowledge graph that the model can use in order to become an expert in this area. That's exactly what we did for OneValley's use case. So here, like the next step is to fuse that domain knowledge with the model to create a bespoke assistant for that use case. So now that we've got this fine-tuned regulatory specialist model, we also need to integrate some additional documentation when real-time insights are needed. And you can think here about maybe for our use case, this would be Financial Crimes Enforcement Network publishes analyses and trends. So they do this on a quarterly basis, right? So we need to make sure that we're ingesting those analyses and trends when we need it. We've got a specialist model, but if one of our analysts has a question about regulations, the latest regulations for Q4, we've got to go out and get that information because it's timely and it's real time. So by creating a vectorized knowledge base with embeddings that can be retrieved when needed, this chat-enabled system we're building is going to be more accurate and timely for the regulatory information use case that we have. And here, like once we have this pipeline built out, what you see on screen is the interaction that the end user is really going to be looking for. This is the Q&A interaction that's enabled by this principally aligned model. You can see here that guardrails are also super important. I think we've all seen instances where AI underperforms, does things that we don't expect, because guardrails weren't put in place and testing wasn't done. So we've talked a lot about what we want this model to do, but we also need to understand and put in guardrails so it doesn't do things that we don't want it to do. And in this example, the guardrails that Seekr Flow would enable you to put in place, someone's asking about data encryption. We know that we have a regulatory compliance aligned model here. So we want to elegantly push on users and tell them what we're actually able to do. And here we say that they can go back and talk to other folks in the organization that have expertise for anti-money laundering and regulatory insights, not anything about data encryption or cloud. So it's just a reminder to leverage the platform from beginning to end when it comes to building a pipeline, but also leverage it to put the guardrails in place so you have a really sound solution. So off-topic detection here is really what we're driving. And lastly, you want to be able, when you deploy and monitor, after you configure those guardrails, it's essential to track the accuracy of the responses. You want to implement feedback loops, right? So when the model does underperform or produce unexpected outcomes, that's always going to happen. Give your users a feedback loop so they can actually reach back out to you and you can hop on it and make the changes. Understand your different metrics for success, and this would be accuracy, this would be alignment to the context that the model is pulling in, but also what metrics spell success for your particular use case. I know OneValley's use case and metrics for success are going to be quite different than what we might be looking for as an end user for the regulatory compliance use case that we have. And also continuous improvement. That's really what is going to drive the success of any solution. With those guardrails in place, with the feedback mechanisms and your clearly defined success metrics, you're going to be able to continuously improve and offer the kind of value that your business and your end users are really looking for when it comes to this kind of cutting edge technology. So with that said, I want to just put up this call to action for you. If you were compelled by the value that Seekr Flow brings and the different use cases that we've talked about, leverage the QR code, get in contact with our team, and we'd be happy to walk you through your particular use case and help you have the kind of success that we know you can with this great technology. So thanks for the time.
Phil, thank you so much for giving us such a great example of how you can go from kind of a new product concept into a trained model. It's amazing how much easier it's come to train and deploy these models over the last couple of years, and really enjoy collaborating with Seekr to make that happen and make it available to more of our early stage AI community. So thanks again, Phil. We are ready to move into our next session. We have a great interview coming up right now where we're going to have a conversation with serial founder Sal Rimatula, who's the CEO of Worth AI. And we'll be welcoming him to our stage to talk about his experience as a founder, the work he's doing now at Worth, and the advice he may have for the founders in our audience about how to build impactful AI fintech products. Juan Scarlett, who's the managing director of OneValley Ventures, will be leading this discussion. Juan, the floor is yours.
Thank you, Alec. Hello, everyone. I'm Juan Scarlett, managing director of OneValley Ventures, where we invest in pre-seed and seed stage companies that are developing next generation software technologies to solve what we think are really high value problems across a variety of different industries. I'm excited to be joined today by Sal Rimatula. Sal is the CEO and co-founder of Worth AI. And he's a former co-founder and president of Stacks Payments, a payment processing unicorn that he scaled to over 100 million in revenues. We really don't have time to list all of his many accomplishments and awards, but just know that this is really a treat. Sal, it's a pleasure to meet you. Thank you for joining us today.
No, absolutely happy to be here. And so far, all the presentations and fireside chats have all been great. So really appreciate you guys putting something on.
Well, thank you so much. So we're really excited to get into the work that you're doing at Worth AI. I think the startups in the audience will really gain a lot from hearing about your journey. Why don't we start there? Could you share your background story from your early days at Morgan Stanley to founding and scaling your first company and to now what you're doing now with Worth?
Yeah, absolutely. I know we have like 15 minutes, so I'll try to give the abbreviated version of it. But yeah, no, I started off in corporate America. I worked for Morgan Stanley, did private banking, equity research. I ended up working for Deloitte Consulting. I did a lot of global transformation work. So, if you think 12 years ago, it was like the new wave of going into the cloud. And so that was sort of that prefaces and sort of led that for companies like HP, VMware, Symantec, but I did it on a global level. I lived in 34 countries across 3.5 years. I started a company called Anaplan out in San Francisco. So I was, for one of the first hires there, part of the I was not part of the founding team. It was founded. I joined them as I sort of kicked it off, but got to see a company go from 10 people to 2,000 people. Raise $500 million of capital and got to ring the New York Stock Exchange bell. So it was a fun highlight there. And then decided to move to Orlando, Florida to actually start our last company called Stacks Payments, where we did integrated payments. So think Square, Stripe, or really about like online commerce and consolidating it, where we did embedded finance. So think about interacting with different software companies and inside the payment ecosystem. And so we did that for almost 10 years. So, people always talk about like the great success we've had so quickly. So we consider ourselves the 10-year overnight success is what I'd call it. And we scaled the business to 40 billion of payments, the third largest processor in the United States. We serviced over 100,000 small and medium-sized businesses. And then we sold the company for a little over $1 billion last February. We still large shareholders, still big fans of it. It was the first unicorn out of Central Florida, first brother-sister team. So if you have 4 more hours, I'll tell you how I can work with my sister. But those are usually the 2 questions I get is how do you build a unicorn and how do you still work with your sister? And funny enough, we're doing it again. And so, leaving that, I took a break, traveled a little bit, and sort of came back to the fact that not only are you just a serial entrepreneur, but like to solve large problems. And at Worth, the main mission, if you sort of think about sort of our background was underwriting small to medium-sized businesses that needed credit and payments. It's sort of interesting in today's day and age that you have a ton of stuff in consumer finance. Like any of us can open up, an Apple credit card off of our phone in like 2 minutes. But if you try to do that same transaction for a business, it requires like 2 years of audited financials, 3 months of bank statements, a full P&L and forecast. And for all the startups that are on here right now, I'm sure, just getting whatever business licenses accomplished and getting set up there, it's just a huge cumbersome process. And we really looked at it and said, like, why has there never been a business credit score? And so we went out to solve that mission. We partnered with, the IRS directly. We're backed by Equifax. We put in millions of dollars of our own money into it. And, we're about 6-7 months in, really excited about the progress we've made. And, we're in some of the largest institutions now and the first ones to create a business credit score and really focused on improving the onboarding experience for small and medium-sized businesses.
Amazing, amazing background, amazing story. And I'm offline. I'd love to talk to you more about working with siblings. Actually, I have several myself, and we've never actually been able to work together as successfully as the two of you have. So amazing. But I definitely would love to dig more into the story of Worth. As you know, you guys sort of spent a decade of your lives building Stacks Payments and getting into that amazing exit. And would love to understand sort of why you decided to jump back in and potentially spend the next decade of your life, building Worth AI, and sort of what was it really about the small business underwriting and lending issue that really caught your interest, and what was the aha moment there?
Yeah, so look, we've been blessed to have had great exits, right? So personally, it's not really a financial motivation. I'm an immigrant. We were Pakistani, moved to the United States. First generation to go to college, et cetera. When you start to look at sort of the lending ecosystem or credit ecosystem, specifically to small businesses, it's not going to be a surprise to you when you look at the statistics, right? It's going to be 76% white male, 56 average. And when you start to look at some of the statistics that come through, I truly believe that banks in the world want that to be different. But the reality is when you think about the credit models and the things that have historically existed, they're based on general linear regression models, which is based on history. So when all these buzzwords around AI and stuff, and there's been versions of this stuff that's existed, but it's always used historical information to drive. And so when you start to think about the business credit ecosystem, you actually didn't have a ton of business information available. So when you think like a FICO credit score, why is it that, we have personal credit scores, but not a business side? It's really the fact that businesses haven't had their information online. And so you had COVID, which really pushed all businesses, including the states, Secretary of State's business licenses, to really digitize their business, right? All of us switched to online ACH payrolls. All of us got a QuickBooks account. All of us put in business licenses and filed our sales tax and our withholding tax online. And so for the first time, you had all this information come through. And then you have this, the new concept of generative AI and something that can inherit large pieces of information come into the ecosystem that can actually go through all this. And that was sort of the birth of why we believe we could do something with it. And so our goal was to be able to bring together, how can we ingest millions and millions of data and actually predict out a financial forecast for these small to medium-sized businesses. And it's really mission centric, right? We believe every business owner should know their worth. And we really wanted the small to medium-sized business to sort of be empowered. And our first and foremost aspect is to do that. But to be able to get somebody to adopt a word score for the society to be able to accept it, you need to win the banks and the enterprises first. And so we had to build an ecosystem where the enterprises that do all the compliance and aspects of collecting this information, how can we get them to utilize our info first and then disseminate that product out? And so we launched that product a year ago, and this February, we're going to launch our word score to SMBs directly. So it's wordscore.com. You can join the wait list, but really think of it like Credit Karma of your own business. So you get to see a full ecosystem with basically just two fields. You need your EIN number and your address, and all of a sudden we can provide you a full holistic viewpoint of that.
Really interesting. It's incredible. So you really have these multiple missions that you're undertaking here. One being, really empowering small business owners, and providing them with more access to capital, and then also on the other end, for the lenders, the banks, the fintechs themselves, empowering them with these tools to better process the information that they're getting, the data that they're getting from these small businesses, enabled by these new AI technologies.
Yeah.
Really interesting. So I'm curious to you mentioned one thing about this idea of more of the bank's interactions and processes moving online. That's also sort of led to this other issue, an amazing and increasing issue of sort of fraud, particularly within small business lending, but also obviously on the consumer side as well. Could you tell us a little quickly about sort of what you're doing and what your product is doing to prevent that?
Yeah, and when you think about sort of the ecosystem, it's funny because I know this whole conference on AI, and the way I look at like AI for me, if we just back it up, it's like saying you don't hear too many businesses say that we're in the cloud anymore, right? Like you don't hear that, and that's how I feel like 10 years from now, generative AI and these large language models will just be fundamentally part of the concept of the way people go to business. And so when you think about that in the same fraud layer, I think sophistication on fraud is continuously evolving. Like that is getting more and more sophisticated. And so it's at the forefront of everyone's mind, right? And then with these new pieces of technology, you have deepfake and more information that you can grab, and a lot of these financial stories that you constantly hear becoming more and more relevant. I think, the general versions of fraud are there, but I think these tool sets are also available to help drive that as well. And so with AI, there's the ability to say that, hey, you can fake more, but there's also ways to check more, right? And so you're going to see an ever evolving conversation here. I don't think that, we're ever going to walk away from a conversation of fraud is solved or these like people just get more and more sophisticated. But going back to our background, we did 40 billion of payments on our balance sheet with never a single fraud case of ours. That led to something, monumental in terms of, bad actors. Did we see them? Absolutely. Did we have losses? Absolutely, but nothing that was monumental in that way, because that's just part of doing business. And so in today's day and age, I think each person has to put that in the forefront of the way that they go to market. And we continuously feel like you got to empower the small, medium-sized businesses at the level to be able to do that, because a lot of the enterprises are well-resourced to be able to handle it.
Excellent. Amazing. Well, I want to make sure we continue to move on here because we got a few other items we want to make sure we discuss while we have you. But there's been this theme today, certainly in our discussions around fundraising, and obviously you and your co-founders at Stacks had a great success in raising capital, and at Worth already, you've already raised a very healthy seed round. Could you tell us a little bit more about, one, I guess, what you hope to accomplish with that seed round capital at Worth, but then also just provide us with some some great advice for founders, about approaching their pre-seed and seed funding rounds in today's fundraising environment.
Yeah, look, I mean, for us, we've had great success where we obviously can leverage our backgrounds and things like that at this day and age. But if I give the advice, I think there's a couple of things that we learned a long time away, right? Like the one line I'll give you is like, cool is not a business, right? Like, so there are so many people that have like really cool feature sets and cool things, but that doesn't mean that it's something that's viable. And it's not to take away from the idea or the portion, but you do have to come to yourself and say, like, is this scalable? Is it a business model? Does it make money? And I think sometimes we get so caught up in like, all I need is that feature set, or all I need is that, or all I need is that, which just isn't the case. I think early traction, your customers, when you have an MVP product, a minimal viable product, they will dictate the direction you want to go, and you'll know quickly. And even with Worth, like we've pivoted 3 to 4 times as we came to market and said, here's the Worth score, and we realized that Bank of America doesn't need my score. I mean, they have 14 data scientists and a billion pieces of information, but they love the way that we got that much information with only 2 fields. So they're like, you know what? We'd love to see your onboarding product. And we quickly pivoted and said, okay, that makes sense. We should sell to onboarding for enterprises, and the SMB will care more about the score, right? So you have to learn to pivot. And so I think in the fundraising capital, I'd say there's 2 things. It's storytelling with evidence, right? I think that an art that people don't teach is like, tell the story, paint the vision, paint where you're going, but what are the accolades that you have to do to get there, right? And those are your KPIs, and you need to know and understand what that success looks like. You don't have to be $100 million business tomorrow, but what's the next milestone for yourself and how you're tracking against it? Because I promise you, any PE conversation or conversation you have, the second it leaves your mouth, it goes into one of their CRM systems, and they'll come back to you and be like, Sal told me they're going to do $4 million at XYZ, and they will check it, and they will look at your track record. And I think track record plays a lot. And then lastly, I think compliment yourself, right? So I would lie to you if I said that I know everything. I've had a ton of success, but Sanira, my co-founder partner, brings a ton of different value to the table. Can we both do the same job? Of course, but she's absolutely better at some things, and I'm absolutely better at some things. So how can you find people where you're not great to bring into it? And then lastly, you are the best salesperson, right? So I think the thing that you also see is you see great technical founders or areas, but they're like, I'll just hire a salesperson to sell it. That's false. If you cannot sell your product in this day and age, in this day and world, you just won't win, because you won't be able to deliver the passion and understanding the customer. And you have to be at the front lines to be able to do that, at least in the early days. And then, yes, when you're scaling and doing those things, you're going to bring in great leaders that have done it. But I'd say those are sort of the things that are sort of create that great recipe to be able to bring in capital.
Wow, Sal, I got to say that was an absolute masterclass on fundraising and an early stage scaling. So thank you so much for that. A couple of quick questions here. I guess one, obviously, this event is focused on how AI is changing the financial services landscape, and obviously you see a huge opportunity with AI-powered business underwriting and lending. But tell us about another area of fintech you think is really most ripe for disruption by AI technologies in the near future.
Yeah, I think that there is I don't want to call it like replacement of humans, because I believe that all humans will continuously, like, you need people there. I think we'll get more efficient. But I do think that there are some random processes that just haven't been touched since archaic days. Like, for anybody that's ever, like, I don't know, filed a Delaware certificate when you raise capital, et cetera, like, you have to get it notarized by like 4 people, then a carrier has to pick it up, and then you have to like physically take it somewhere. Like, that whole process, there's got to be a better way, right? And so when you think about AI, like, imagine me getting that doc in my email and then it automatically scheduling somebody to go through those steps, so I don't have to do all those things. When you think about like home automation, like right now when, I don't know, my HVAC isn't working, I go on and I look for an HVAC supplier, then I go through the Google reviews, then I have to figure out if I'm free at 2:30 to be able to book my time. Imagine that entire process being gone. So you're going to see people like systematically solve those 15 questions that are all disparate today, that all come to me. So I think you're going to see a lot of things in that space. And it won't just be on the personal side. I think it'll be on the business side. It'll be on the banking side. It's really just going to be about connectivity in the way that we operate and really making our lives easier.
Excellent. Yeah, I totally agree. I think there's these unlimited numbers of processes and workflows that we see in our everyday lives of both consumers and on the business side that are just absolutely ripe for for AI technologies in the near future here. So very much looking forward to the companies that are building those. Last thing, Sal, what is the one piece of advice you have for founders in the audience looking to build a meaningful fintech business that we can end on?
Yeah, I sort of alluded to it in the beginning, but I think it's truly like, focusing on a narrow market, right? And being really, really good at it. I think a lot of people like love this, TAM slide and are like, I'm going to solve 45 verticals and 65 things. And that may be the case over time. But I think if you can be really, really great and get early customer wins, I think that will then dictate the direction of product and focus, right? And so to me, I think it has to start with customer first. I see too many people build just immensely amazing, but just really, really deep technology, really deep stuff. And like, they don't hear the customer's voice up front. And so I think the sooner you can bring the people you're selling to into your process, bring them in, get the champions, like Amazon and Jeff Bezos, if you ever heard it, like they put an empty chair in every conference room to represent the voice of the customer. And it's that style of mentality that you need to culturally permeate for yourself. And if you're a team of 1 or you're a team of 20, I think how quickly can you get whatever it is that you're building in front of a customer? I think it's the quickest way to seeing success for yourself. And it doesn't mean you're going to get it right the first time, but I think that's the best version of feedback for you. And it's something that I think can help propel and grow quickly.
Wonderful. I couldn't agree more. Well, listen, Sal, unfortunately, I believe we do have to end on that. Thank you so much again for joining us today and being so generous with your time and for sharing all these incredible experiences and wonderful insights with our audience today.
Well, really appreciate it. If you guys feel free to, find me on LinkedIn, shoot me a message if you need anything. For the business owners, you can check us out at worthscore.com. There's a wait list for the ones that come out at February. So I'd love to have you all part of the platform.
Thank you, Sal.
Thanks, guys.
Wonderful. Juan, can't thank you enough for leading that conversation. Could listen to Sal's advice and feedback all day. I'm sure the founders in the room would agree with that. Really an amazing perspective. And with that, our time with all of you today is starting to run short. We have 2 amazing sessions left. The next one, which I'm pleasured to transition into right now, is an interview with Martin Whitaker, the founding CEO of Just Capital, and Alex Fang, who leads the social impact work at OneValley, focused on the question of what does ethical AI mean in financial services? If they can somehow generate an answer for that in the next 15 to 20 minutes, I will be blown away. But it's a really important topic for all the founders and everyone, all the other stakeholders that are with us today. So with that, Alex, Martin, the floor is yours. Thank you so much.
Thanks, Alec. Hi, everyone. As Alec mentioned, I'm Alex, and I lead our social impact initiatives at OneValley. Today, I have the pleasure of speaking with Martin Whitaker, the founding CEO of Just Capital, about ethical considerations in AI and financial services. Martin, thanks for joining us today.
It's my pleasure. Thanks for having me. Thanks to OneValley and Alex. It's great to see you again.
Yeah, likewise. It's been a minute. For the benefit of the group, can you please share a little bit about your background, how you came to be the founding CEO of Just Capital?
Sure. I mean, very briefly, I've been in this intersection of capital, business, and markets on the one hand, and, trying to do some good in the world on the other hand. That kind of overlapping area my entire career. I did a PhD at Edinburgh University on environmental risk assessment. Figured that I wanted to go into business. My first boss said, Martin, if you want to change the world, follow the money. So that's sort of what I've done. And I spent a lot of time in the private wealth space. I spent time at Swiss Re. I worked in the family office area. And then about a decade ago, I was approached to be the CEO of a new organization, a nonprofit, Just Capital, which was founded by Paul Tudor Jones and a group of other business leaders to really try and leverage the private sector and markets to really address some of the most pressing societal challenges that we face. And so that's what we've been doing for the last 10 years.
Great. Tell us more. When we first met in San Francisco, you were launching the Just AI initiative. how's that going? And tell us, tell for the benefit of the audience, what is that?
So the best way to explain that is just to provide a sense of what Just Capital does overall. We are an independent group that tracks, measures, and ranks companies, big corporations primarily, on how they perform on a range of stakeholder issues. And those issues are determined not by us, but by the American people through representative polling, survey, public opinion research. So we go to the public, we say, hey, what do you think is important? What is just? This idea of being just, what does that mean to you? And so we get a whole bunch of things that come back to us. We categorize them, turn them into an overall kind of framework for tracking company performance. We gather data that tells us how companies are doing on those things that the public have told us matter. And then we rank them. And increasingly, we're working with them, the companies, to help improve performance. And so a couple of years ago, as we started to look at what was happening in the world, what was going to affect the future of corporate performance, and the role of corporations in society, which really we should talk about, it was clear that AI was going to affect a lot of that. And so we wanted to really try and create a process for at least asking the question, if not answering it, Alec, I'm sorry, we may not get to the answer, but asking the right question is sometimes the best thing you can do. And I think we wanted to understand, what does the AI mean for a just company? What does it mean to be a good employer, to invest in your workforce in an AI future? So those are the kind of questions that the public have. Those are the kind of questions that we're trying to answer through the AI initiative. Just to frame it, to try and figure out, how do you measure it? What kind of data do you need? And how does that connect to, more classic, traditional drivers of financial market performance, total shareholder return, growth and competition?
That's fascinating. So, as you've gone down this journey to look at how AI is being deployed, what are some things that have surprised you as you've launched your initiative?
So we've had a number of webinars with different constituencies in the financial markets and the corporate markets. I think one of the things that surprised me first off was just how nascent major investors' understanding of AI really is. I'm talking about large pension funds, large asset managers. I think it reminded me a lot of climate change, Alex, back 20 years ago when, questions are first asked, like, what does climate change mean for the global financial markets? And, it's taken probably a decade to even ask the right questions, and another decade to try and start to get some sense of what those answers might be. What does climate change mean for big pension funds, for the value at risk in their portfolios, for what it means to invest in companies that are part of the solution, not the problem, things like that. I see a lot of similarities here where it's going to take time for big investors just to figure out what this means for them. If you're running a big state pension fund, you're running a corporate pension fund or a large asset manager, most of the AI conversation is around the venture markets, private equity, and things like that. I don't see enough questions being asked around, what does this mean for investors overall? Like, how should we be thinking about our portfolio, asset allocation, portfolio management? What does it mean for risk? What does it mean for opportunity? How do I position? We're still very, very early in those kinds of conversations.
Yeah, so let's go a little deeper on that. So over the past decade, Just Capital has played an integral role in helping companies define their climate strategy, articulate their net zero goals, and help them create plans on how to get to those net zero goals. What role do you think Just Capital is going to play in answering the questions related to AI for these companies in the future?
That's a great question, Alex. So we have, again, just a step back, we take a systems-wide view of the role of corporations in society. When you ask the American people, what matters to you about companies today? What do you think about? What do you care about? It comes down to 5 categories. One is how companies treat their workforce, their employees. 2 are the communities where they operate. 3 are the customers. 4 is the environment, and 5 is being run by people with integrity and ethics, which relates to governance. And it also includes making money. You know, people know that companies have to make money and be profitable in order to succeed. So you get a very real world view of sort of, the spectrum of things that matter today to the standing of corporations in society and how they can compete and win. Those things over the last 10 years have become way more important to the bottom line. You know, companies that do well in treating those stakeholders right will do better in the markets. And our data, our financial work, our indices, we have about $500 million in different funds managed according to our data. All of that would show that there's a very strong business and investment case. So we have learned, to answer your question, that simply by tracking what companies are doing in a very objective, data-driven way, doing that using metrics that companies believe matter, so they have to be kind of relevant to how companies are run. They have to be actionable. So if a company wants to improve on something, they can actually take action to do that. And then there's sort of recognition of leadership, which is a core part of our strategy. Our partnership with CNBC has given us a pretty big megaphone to highlight leadership as we see it. So you apply AI across all of that. I think our biggest contribution, first of all, is to put it on the map of large corporations and how are we really tracking performance? How do you know which companies are doing a great job of using AI or leveraging AI for the benefit of their employees, of the communities where they operate, of their customers internally so that they're well governed, to benefit the environment, combat climate change, things like that. And which companies, let's say, are not doing a good job of those things, which companies are behind the curve. So by tracking that, by recognizing leadership, identifying best practice, discovering new data. So that's in this case is going to be essential, because I don't think we've really figured out how to measure what leadership on AI looks like in the workplace, for example. You know, there's no standard metrics for those. So I think progress in that direction will require the development of more universal standards and data, but generally going in that direction of helping the market figure out who's winning, who's losing, and then how do we reward and punish those companies.
That you bring up a great point, and I want to talk a little bit more about usage of data and get your perspective on a pretty common question that startups face. So, you know, it's sometimes unclear if data can or should be used to train models due to copyright issues or a host of other potential ethical and occasionally legal concerns. But for smaller startups that are moving fast with limited resources, you know, it can be hard to balance whether or not they should scrape data or use data that it's unclear whether or not there are any kind of legal rights to that data. So, you know, how would you suggest that they think about the ethical AI and the balance that's necessary in being competitive and moving quickly versus the need to practice the ethical use of managing that data?
Well, I'm not an ethicist, so I caveat my answer with that. I would say, what I've noticed from studying companies, running Just Capital, and really looking at how leadership with integrity drives success, I think the answer to that question you asked me is no different than how you would run a company with integrity anyway. Every company that we see that does well, that does the right thing by its stakeholders, has somebody at the top who believes in running their company with real integrity. And, it's very difficult to kind of pin that to the wall. It shows up in the way they do business. It shows up in, a sense of values at the company. It shows up in companies trying to do the right thing. It doesn't mean they don't make mistakes. It doesn't mean that, they're somehow, kind of ethically pure. But it does mean that they try to do the right thing. And I think it applies here too. Smaller companies, private companies, I think there's an awareness about what's happening in the world. Brookings Institution, for example, just did a great study on AI in the workforce, AI in the workplace, what that means. Awareness of that can be applied in a very unique way, or a very customized way to every company. And so I think it means different things to different companies, but asking the right questions, having, the culture to engage in conversation and debate within a company, about important matters like that. Those are universal things. They apply just as much to AI as any other aspect of corporate, or company leadership.
Excellent. Okay. So, in your work with financial institutions, many of which are trying to serve underbanked or underserved populations, how do you think, what role do you think AI is going to play in democratizing access to financial services? Do you see any momentum or particularly exciting projects that you think will change the future?
I think in a macro view, the previous panelist, Sal, was talking about, starting a business. I mean, it kind of interested me because I think the same thing would apply to investing. So few people really think about markets and how they can participate, how they can put their capital to work. It is a very sort of pure expression of democratic right to be able to buy, to be a participant in the stock market, for example. But, awareness of that, education of that, understanding how to run your finances, I think being able to democratize that, get many more people participating in the system. One of the problems we have in the world right now is that there are a lot of people, majority of people, just don't think the markets are working for them. They don't think that the system is working for them. And when you don't think the system works for you, you're kind of apt to want to tear it down. You want to break it down. And I think we have a lot of people feeling cut off and disenfranchised, trying to regain some sense of ownership, and through participation. AI can help with that. I'm also minded of very concrete applications. Our mutual friend Phil Chow at Humanitas, the work he's doing there is super impressive, to really try and help the lowest, the worst off in society gain access to basic services, basic sources of financial support or other kinds of aid and benefits, navigating that benefit system. If anybody on this Zoom call or webinar has ever done that, is a nightmare. Navigating health benefits, as I've had to do in the course of my life, is just incredibly difficult. I mean, I can't imagine how people do that if English is not their first language, for example. So I think AI can help with so much of that, and it will regain a sense of faith in the system that will allow more and more people to participate in creating a better, more inclusive, prosperous future.
Yeah, wonderful. I couldn't agree more. And the work that Phil's doing at Humanitas really is incredible. There's been a fair amount of talk today about how AI will make our lives better by making work streams more efficient, removing the need for human intervention. I want to ask you, in the areas of FinTech, what parts of human expertise do you see as indispensable and irreplaceable with AI?
Well, I'm very cautious about making projections like that because the minute you do that, you probably find yourself redundant. I think there's a sense now that the judgment that comes with how to deploy AI in a way that is, for the most, creating the most mutual benefit, and the complexity that runs across all of the kind of the trade-offs associated with that. I think there's you can't really take out the need for human judgment in that deployment. In financial services and investing more broadly, as opposed to the functions that go, that underpin decision making, where AI can play obviously a crucial role. But I work a lot with families, with investors, and have worked a lot with investors throughout my whole career. And there's a sense of purpose, a sense of legacy, maybe that drives people forward, that creates the kind of future that they want. Capturing that is very, very difficult, and I think that is an area where if you're fiduciary, if you are investing on behalf of other people's futures, and you are trying to keep those best interests in mind, I suspect that if humans do have a future in investing, it's probably longest in that area.
Excellent. So I know that we are running short on time. I want to wrap up with one big question. So what is your vision for the future of AI? And if you had to, give some advice, how can we ensure that it serves the greater good rather than just a handful of small private interests?
Well, Just Capital is kind of founded on this faith in the public point of view. That's why we do the polling. And I'll give you an anecdote. When we first started, we went to the American people. We told people in a circle, or our friends, we're going to ask people all around the country what a just company is. And most of the opinions we got back were sort of like, why would you do that? The public don't know anything. The public can't agree on anything. They're going to get the answer wrong. And in fact, the opposite was true. We saw a lot of agreement. We saw a lot of very strong kind of kitchen table values that were uniting in nature, not dividing. Most people want the same thing. They want a better future for themselves, for their families, for their loved ones. And so I think the biggest challenge AI has, and those practitioners, those developing AI, and certainly those deploying it within large situations, is to do that in a way that is in the broader, enlightened best interest of the population. And there should be a mechanism for asking people. I feel as though it's really not for a few people to decide what's good. I would much rather go to the public and ask them, what do you think? In terms of layoffs, is there a just way to do layoffs, which is a question we have asked. Is there a just way for you as a frontline worker, as a retailer, a cashier, to have AI make your life better? What does that look like? Anytime you start to ask people how to, use AI in a beneficial way, you're going to get a good answer. So I would see a lot more of that, and I would place a lot of faith in that, and I think that will steer us right.
Wow, well said. Martin, it has been such a pleasure interviewing you today. There's so many more questions that we have, but we're going to have to end it there. It's been incredible. Thank you again for joining us. Alec, back to you.
With that, we are now to our final content session. We're going to be hearing from two seed stage founders that are already in the market, making an impact in financial services, and we can't wait to see what comes next for them. First up, it's my pleasure to welcome Kalyani Ramadurgam, the CEO of Cobalt Labs, on how her team is revolutionizing fraud detection through AI.
Thank you for having me. My name is Kalyani. I'm one of the co-founders, the CEO of Cobalt Labs, and we are building modern third-party diligence for financial institutions. We're a seed stage company, and we're also a OneValley portfolio company. So happy to be here. I'm going to start these couple minutes with just an overview of AI and financial services and our perspective of how we fit into that ecosystem. So, you've all heard of a lot of the established use cases of AI. We've all heard of things like automated decision-making, user-facing chat, and of course, AI has been involved in the underwriting process for much longer than, our modern conception of what AI is. Our journey into this is a little bit different. My co-founder and I both have backgrounds working in FinTech and things like fraud detection and risk. And one of the things that we've learned is that risk and compliance operations are absolutely overburdened with manual research. If you think about, the average amount of due diligence that compliance teams have to do and working with new partners or vendors, there's just hundreds and hundreds and hundreds of pages of documentation and various regulations and responsibilities to juggle. And this is a problem. So it slows down the time to market, and it also slows down things like revenue realization of key partners and partnerships. It also results in oftentimes issues that are missed that would have often that become large problems when ignored. This year, if we look at all of the recent consent orders and enforcement actions that have been levied against banks and fintechs and other intermediaries, especially within banking as a service, it seems like almost every 2 weeks there's a new consent order against a bank for not properly conducting enough due diligence against third parties. And this is partly because of the increased regulations, the increased amounts of responsibilities they juggle. And this is now becoming kind of too much of a problem to just throw more humans against. And in tandem with this, in the last year and a half, we've learned that generative AI has become extremely good at reasoning with very large amounts of unstructured text, which coincidentally aligns very closely with what risk and compliance folks have to do on a daily basis. So this leads us to ask the question, can we use these modern tools to actually give risk and compliance teams superpowers and address some of the issues that I've raised today? This brings us to our company's core use case, which is third-party diligence. So what Cobalt Labs does is we actually automate the review and onboarding of vendors and partners during the third-party diligence process. So what does this actually mean, and how do we do it? Using AI, we've been able to synchronize with essentially every single major financial regulation across the world, every single security standard, and all major privacy legislations. So for those of you that are in the know, think Reg E, Reg C, PSA AML responsibilities, UDAP laws, and of course lending laws, and the list goes on. We also are synchronized with all of the guidance that's systematically released from the regulators and upcoming guidance that is going to be released. So think about the recent TPRM interagency guidance that the FDIC and the OCC collaborated on. That's the kind of thing that we also pull into our system. So when we have this kind of repository of regulatory knowledge, it allows us to essentially screen documentation against thousands of sources in minutes and really just supercharge the third-party diligence process. And when I say third parties, this means a couple things. It means that we're able to immediately conduct a screen against vendor documents during the vendor risk review process. So think, contracts, policies and procedures, MSAs, security docs, SOC 2 reports, questionnaires. There's often a very, very large laundry list of documents that financial institutions are required to parse through very thoroughly. And AI is kind of the perfect wedge to give them superpowers and make sure that they're able to go through this process efficiently and effectively. In addition to third-party documents, we've seen that our banks are also using us to screen their own internal documents for potential issues. So think of a bank's, AML policy, think of their other procedures, all of the various disclosures that constantly have to be kept up to date and improve as regulators release new guidance. So we're able to screen all of these and make sure that not only vendor documentation, but a bank's internal documents are up to speed, and will make sure that they're not put at a major reputation risk or a major risk of missing an issue with one of their partners. Just to give this a little bit more concrete of a visual, we've had one of our banks give us permission to raise one of the issues that they found with their sample AML policies. So imagine you're a bank, you're doing diligence on a vendor or improving your own policies. You upload your 200-page document into Cobalt Labs, and immediately, based on all of the regulations and all of the training we've done on the guidance from the major bodies, we can detect that there is an issue with your suspicious activity reporting, filing, and procedures. This is a big deal because if you look at all of the major BSA and anti-money laundering fines that are levied, about a third of them usually revolve around SAR filing procedures. And it's extremely important to raise these risks as early as possible. And banks often have teams of folks that are just looking for BSA AML issues. And it doesn't just stop with raising these risks, right? When we think about how to make AI useful, it's about figuring out what the issue is and then figuring out what should we do next. So one thing that we do is we always cite all of our sources. We always suggest what needs to be done to remediate that risk. And then we also give our customers a chance to tag notes with every risk that we raise and essentially make this an actionable workflow that can be routed to the right people and even exported in templates and workflows that are necessary in order to comply with audit responsibilities. So what are the benefits of using a tool like this and leveraging AI in risk and compliance operations? The first one that we kind of automatically see off the bat with respect to ROI is that this allows our financial partners to scale up their vendor programs or their banking as a service programs extremely efficiently without having to double or triple headcount. We normally see about a 4 times increase in speed of diligence reviews by automating that initial research and review, and also kind of removing their responsibility to continue to always check regulatory websites, new proceedings, and new consent orders. Second, our banks are often faced with this increased ability to get to market first if they're able to get through this review with new technology partners very quickly. Again, they're able to automate these initial results of risk review so that humans in the loop can then do what they do best, make those final decisions, and kind of not wait for human reviewers to do what AI can easily kind of help them with. Third, we always see kind of lower costs with leveraging AI in this way. We find that our financial partners end up saving hundreds of hours of time and a lot of money when compared to using either in-house efforts or alternative legal sources, alternative legal services that often end up kind of just piling on. And lastly, of course, increased risk reduction. If you're able to synchronize with thousands of sources in real time and have a second pair of eyes that makes way fewer mistakes than a human reviewer, we end up seeing stronger compliance programs, risks that are identified earlier and more effectively. And we also see that by having a workflow that's powered by AI and can easily kind of add to all their capabilities, they're able to align their workflows with updated requirements that come out from all of the different kind of alphabet soup of regulatory bodies that they're responsible to. Just lastly, in addition to that screening of vendor and internal documentations, a couple other capabilities that we have for our financial partners is, if you think about, needing to screen vendors for things like OFAC checks of beneficial ownership, we have a one-click ability to immediately scrape the internet for any negative news, financing history, and relevant lawsuits and breaches of a particular vendor they're doing diligence on. We can also take all of the information that we take in from our customers and auto draft things like risk assessments, reports, and templates just to help, supercharge their workflows even more and see how we can streamline it as much as possible. Again, they use our tooling to improve on internal policies and procedures. And lastly, if you think about kind of a generalized regulatory engine, a really easy use case that also pops up from this is doing easy UDAP checks for things like marketing materials or other materials that FinTech partners or vendors are putting out. Hopefully that gave you kind of a nice overview of what we see are the really big opportunities to streamline and revolutionize risk and compliance operations for financial institutions using AI. If this sounds interesting and you'd like to learn more, feel free to reach out to the organizing team, or you can contact me directly at kalyani@cobaltlabs.com. But I will stop there. Thank you so much.
Thank you very much, Kalyani. Really a great presentation. We had so many speakers today talking about the importance of finding a really high value niche to just go in and delight customers in and offer an amazing solution. And it's great to see what you have done around this area of vendor onboarding in an incredibly complex and insecure world. So thanks for taking the time to share Cobalt Labs with us. I'm sure any of the financial stakeholders around will be checking it out. And with that, we're moving to our last presentation for the day. It's my pleasure to welcome Alex Harmson, the CEO of Global Predictions, which is a digital twin of the economy being leveraged for predictive financial decisions. Alex, the floor is yours.
I'm Alexander Harmson, CEO, co-founder of Global Predictions. Like Alex said, we've built a digital twin of the global economy, which sounds crazy. So a big part of my presentation is just sharing some of the specific product features, highlights of our API, and the kinds of things we've enabled for all of our partners across millions of clients. At its core, we offer financial advice powered by AI and this hedge fund-inspired economic insights engine. One thing to note, which is kind of interesting, as Martin pointed out a session or two ago, is that feels like the fiduciary responsibility of humans might be one of the last bastions to fall. And I have to include this slide because actually a year ago, we were registered with the SEC as a registered investment advisor, and our AI is now actually allowed to give financial advice, within our platform, within our partners. We think this is a huge advantage. We actually think that this is a huge barrier to cross that many others might not be able to cross. We have a consumer product that we feel like is sort of our experimentation platform, and then an API that we work with dozens of companies. Right now, we have about $20 billion of assets on the platform across 23,000 users. Those are on our Portfolio Pilot platform, and millions of others in connected APIs. My co-founders, ex-Bridgewater. I successfully exited an AI company before. Everything is deployed to production, used at scale. If you're interested to test out any of what I'm showing here today, sign up for free at portfoliopilot.com or reach out if you're interested to partner. At its core, when we think about this digital twin and the way we've mapped out this economic model, a core data infrastructure, 14 different APIs, hundreds of thousands, if not millions, of data streams across news, macro events, individual securities, information about companies, funds. We pull all that together into this knowledge graph, this weighted directional relationship that describes these relationships. There's a world monitoring engine where we're calling out thousands of anomalies on a daily, weekly, or monthly basis. There's an ensemble forecasting system that we've built that uses these hybrid AI macro models to predict what's going to happen over the next 12 months. Set of portfolio management tools. People can connect their individual investing preferences. There's a recommendation engine that uses an audited scoring system. And then there's a number of different AI and LLM tools that we've used to make the interaction more intuitive as well. It may seem like a lot. We have a 10-person team. We think about 95% of our effort is focused on this core engine. And then there's a number of different application-specific businesses that are built on top of this. Most relevant today is portfoliopilot.com and this GP API that we work with partners on. There is just a lot of information for individuals to consume, everything from dividends and scoring to ESG to connected accounts to what's happening daily, monthly, weekly, what's important to them in terms of estate planning, scenario modeling, problems, solutions. And so one of the things that we do is we're able to show that, pull that all together into one easy assessment, which is similar to what you might find if you were to talk to a financial advisor, pick up the phone, get an email. Just they do it on a semi-annual basis. We do it in real time for any portfolio with any information. A core part of this is the financial advice that we are able to give to clients. The financial advice comes in many different formats. We like to make it as easy as possible, specifically say, if you take this very specific move, this is the tax impact on your portfolio. Here is how it will impact your portfolio score. Could be simple stuff like replacing a mutual fund with a similar exposure but lower fee ETF. Could be decreasing the inflation risk in your portfolio by adding a commodities fund and looking at the impact of that. Could be using an efficient frontier optimizer to be able to reweight items in your portfolio to increase your expected risk-adjusted returns. Could be any number of suggestions that are personalized based on what's happening in markets, your individual investment and recommendation preferences, and what's currently in your portfolio, where your portfolio isn't just your investments. It's not just the equities that you have exposure to. Could be funds, could be real estate, could be private equity investments, angel investments, your car, student loans, anything like that. We take into account taxes as part of a what we call our continuous tax optimization features. So we look at estimating capital gains taxes across a portfolio, across aggregated accounts. We can look at all of the current tax burden to date, and then actually use a continuous tax loss harvesting strategy to be able to estimate the tax impact, to recommend similar securities that you might want to trade into that don't break the wash sale rule, but are similar exposure. We think this is the kind of thing that has major impact, that has mostly been limited to internal funds or robo-advisors. The ability to be able to do that in platform for self-directed investors, we think, is a huge opportunity. There's interesting ways to be able to use LLMs combined with our portfolio management system to be able to search for a certain bucket or theme, come up with a number of potential securities that fit that theme, automatically build benchmarks against that, and then look for potential alpha. This helps with the research. Could be our AI assistants and the ability to ask questions. There's a RAG system behind that we've made available that both looks at the recommendations and financial advice and the rest of your portfolio, but also what's currently going on in markets combined with general knowledge. And then, being able to pull all that together, if we're already mapping everything, it's easy to connect the dots, call out relationships, call out changes in models or forecasts. It's easy to connect that to people's individual portfolios. And so the last two slides here, I want to talk a little bit about, what we might be able to do with people in this audience. Our partnership integrations in particular are a huge focus for us over the next year. And so we've done multiple different integrations already with millions of users. Everything that I've shown here in these previous product examples, we use in portfoliopilot.com. We have tens of thousands of users using that directly, experimenting with it, helping us to quickly iterate and build better and better tools. And then we think the long-term benefit is more of these partnership integrations where we can make those same tools available through our API, data streams, however exactly we want to integrate that into partners. And they find tremendous value from that and being able to add what we think of as either complete advice or opinionated insights to a relatively commoditized financial space. If you're interested, reach out, alex@globalpredictions.com, or sign up for free at portfoliopilot.com. We'd love to have you. I'd love to hear feedback.
Thank you so much, Alex. Really appreciate you taking the time to show all the incredible work that you've done and the way that you're now handing over a toolkit to other founders, other startups that want to build and integrate these type of solutions, into the world. And as they become more of a kind of benchmark expectation from consumers and wealth managers, rather than kind of the outlier. So really appreciate you sharing with us, and thanks for joining today.
Thanks for having me, Alec. We're just at the start.
Wonderful. Can't wait to see what happens next. And with that, that was our final discussion, and we've reached the conclusion of our event today. We really hope that you all found today's discussion as interesting as we have, and want to thank you for joining us. A couple of housekeeping items. A recording of today's session will be available on theonevalley.com. Details on accessing that recording will be shared in a post-event follow-up email, so just keep an eye on your inbox. Also, as we previously mentioned, you've heard a couple things about Seekr and the Seekr Flow platform, which is available for startups that want to build, train, launch, and monitor their own AI models. Feel free to go to this QR code and schedule a one-on-one consult with one of their AI experts, or go to Seekr.com. And as I mentioned at the beginning of the call, OneValley is launching a new support program for early stage founders that are building at the intersection of AI and FinTech. This is going to include technical advisory support from experienced AI leaders, access to free and discounted AI models, and computing infrastructure to get moving quickly and cheaply, and being able to go and get your product to market. And then an ecosystem of introductions and matchmaking between startups and established financial institutions, established FinTech leaders, as well as investors that are focused on the pre-seed and seed stage. So if you are a pre-seed or seed startup, you're at the intersection of FinTech and AI, and you want to be part of a broader ecosystem, go to the QR code. You can apply. It's like 5 really simple questions, or reach out to Tara, who led our AI models panel, at Tara at theonevalley.com for more information. So with that, again, thank you so much for joining us today. This event is part of a series of events and programs and initiatives that we run focused on different emerging AI industries and use cases. So please stay tuned for whatever's coming next. Hope you have a great afternoon, evening, or whatever time it is where you're joining us. Take care.